Trading these on the right. Beautiful. Okay. Easy. Easy peasy.
Well, we should be good to go.
Really? Leah's not going to introduce. Hello, everybody. This is Hyperwave, and this is our webinar about the Seljen Trading System. Leah is with us today, and she's running things, and we'll be taking questions. And Socrates is with us. He built most of the program we're going to see today, and you will be getting this 37, 38 page detailed analysis of everything we talk about for the next 3.5 or 4 hours on the Seljen Trading System. But we will be going through it the same way that you will be able to go through it after the show today when you get all of the materials. So we're going to cover an awful lot of material, and I just thought it'd be important to start out with general context. Some of you know that a couple of weeks ago, Leah and I did a vlog in which we listed 12 basic principles of the Lucid investment strategy trading system. And we will be referring to those at various times, but I'd like to put into context what we are trying to do in terms of teaching trading. Not getting you to the point where you listen to us to make trades, but where you can do it yourself. Now, a lot of what you hear on YouTube isn't what I consider to be investing. It's what I consider to be either short-term speculation or swing trades or position trades. And I do all of those personally. I don't do it for clients and I don't teach it, but I love it and I enjoy it. Socrates loves it and does it all the time. He loves short-term speculation, short-term trading, but also understands the principles of investment. And one of the reasons that he and I have linked up is because his willingness to learn some of these newer systems that really can't be learned anywhere else, such as Hyperwave, such as Consensio, and today the Seljen Trading System. And when I first realized what these things were, they were eye-opening to me because I hadn't read about them anywhere else. I'd read about other trading systems or investing systems that use some of these principles, but not to the point that over the last 40 years I had refined them, but I refined them for one very specific reason. And that is going back to our 12 basic principles, which I'm going to go through very, very quickly as a backdrop before we get started. And the first one is, as an investor, cash is king. And what that means, and is very counterintuitive, is as long as you're sitting in cash, you're not taking risk in a general sense, in the most important sense, which means over the next 3 months or 6 months or a year or 5 years, if you're sitting in cash, that cash is going to stay there. Everything else you put your money into, it is not going to stay there. It is either going to appreciate or it's going to depreciate. And because of that, the caveat I use is that cash is king unless an asset class is trending up. And that's the first hint about what we're going to be talking about today. We're looking for asset classes or individual stocks or individual indexes or individual commodities or currencies that are trending up, not trending down. And there's a reason for that. We're not going to go into that today. We talked about it when we talked about the principles. The second thing, though, is that all asset classes, principle number 2, trend both up and down. Now, these seem like the most obvious observations in the world, but 999 out of 1,000 investors don't understand it. Or if they've heard it, they don't believe it. Or if they kind of believe it, they don't have enough faith in it to use it as a guiding principle. And I have been attempting to override those preconceived notions by even experienced investors to understand how basic these really are to getting good investment results over all time periods, regardless if markets are going up or down. So we're going to just start with those 2 basic principles. One is we want to be in cash as often as possible. The only time we don't want to be in cash is we find something that is trending up. And when we find something that is trending up, we want to use some of our cash to get into that until we know it's trending up and it's developing into a long-term trend. What we're going to talk about today is a technique to find the bottom of an asset class, or the bottom of a stock, or the bottom of an index, or a commodity, or a currency, using a very different parameter than a lot of people use. And we call it the Seljen Trading System, named after myself. The J-E-N in Seljen comes from my last name. The S-E-L at the beginning of the word Seljen comes from the first 3 letters of the last name of the partner that I had that created this system. His name was Dick Self. So that's where the name Seljen Trading System comes from. What we're going to do now is we are going to slowly, very slowly, explain the construction of what is called the Seljen, or the Megaphone, or the broadening top or bottom. And we will take a full hour to just go through these basic principles. But I wanted to start off with reminding you what you are hearing, the context in which you are hearing it. We do not attempt to teach short-term speculative trades or even position trades. I will go as far as saying that most of the principles that you've heard Leah and I talk about over the last year and a half have to do only with long-term trades and the fact that they will all come to an end. Many of them will never begin because you'll never put money in them. You'll be too late, you decide you don't want to do it, and you go on to something else. And in my world, that's perfectly fine, because there's another 4,000 things you can find to put your money in. So many long-term trends that other people are playing, you might not be in. And I'll give you an example of the US stock market from 2009 right up through today. An awful lot of people that should have known better got so scared out or destroyed by 2006, 7, 8, and 9 that they never participated with their retirement accounts or their trading accounts or their stock accounts in 2010, 11, 12, 13, 14, 15, 16, 17, 18, or 19. A very large number, a very large percentage of people have not been in those markets at all. One of the greatest runs, if not the greatest run in US stock market history. Well, if they were sitting on $1 million in cash, they're still sitting on $1 million in cash. They're perfectly well off. They could have been sitting on $3 million or $3.5 million in cash if they had rode that trend. What we're going to talk about today is the way to find those bottoms with confidence and how to trade them and where to put your stops. But much more importantly than putting money that's out of the market into the market at a bottom is once you've already done that and you begin riding a long-term trend, how in the world do you know when to get out? And we've taught Consensio that to me is the single best system for understanding how an uptrend turns into a downtrend and when, as well as when a downtrend turns into an uptrend and when. Because it's always working for all assets over all time periods, long-term, intermediate term, and short-term. That is not true about what we're going to teach today. And as you already know, those of you that have studied or taken the workshop or listened to the webinars or the blogs on Hyperwave, Hyperwave does not fall into that category either, meaning the category that Consensio is in, which is it is always working for all asset classes. Hyperwave only works when something is in a hyperwave. And then, as we found with Bitcoin, Hyperwave stops talking to you at a certain point. And that point is when you enter a phase 7. In a phase 7, Hyperwave doesn't comment. It makes a brief exclamation when you get down to the phase 3 line because there's a possibility of a funky hyperwave. It gives you a brief exclamation when you get down to the phase 2 line because there's a possibility of a funky 2 hyperwave, phase 2 funky hyperwave. But after that, it is silent. There are no rules, there's no observations, there's everybody on Twitter and in the chat making all kinds of proclamations about what Hyperwave is or isn't saying, or it doesn't work or it does work. For me, it's saying nothing. Ever since we peaked out on the phase 6 retracement up to 17,500, Hyperwave goes silent until you go all the way back to the beginning, down to phase 1, which it has not done, so it is still active and will remain active. There's only 2 ways to erase that, to make this Hyperwave go away. One is to get down to 1,000, and the other is to get above 19,666. But other than that, Hyperwave is silent. We're going to see another system today called the Seljen Trading System that in some cases will point out an asset or an asset class or a sector or an index that is screaming, "This is the end, my friend. We are not going any further up, or we are not going any further down." And as remarkable as that sounds, we will demonstrate to you that that is not an overstatement. And so what I'm going to do now is I'm going to turn this over to Socrates, who put this wonderful presentation together. And I'm going to have him take you step by step through being able to picture in your mind what these things are. And then we'll take some breaks and we will have a discussion, Socrates and myself, about what we've just talked about. And then we'll take some other breaks before we get into details of a lot of examples, not only historical examples, but current examples. And in the last hour or so before we get to questions, I'm going to give you some thoughts about what I'm seeing with the Seljen system today in many markets, but particularly in the US stock market. It's got me very, very nervous. And those of you that follow us know that we went from 100% in the market back through September of last year to 100% out of the market through the second week in December, then 50% in the market until April 1st, and then 100% in the market. and now we are only 50% in the stock market. And a main reason for that is the charts you're going to see today. Consensio is the driving force behind the decision. In some cases, Hyperwave is helping me make that decision. But a lot of it has to do with what you're about to see today. We're not trying to make people nervous, but we want to give you the tools to be able to evaluate where you are with your money in your retirement accounts or in your trading accounts. So with that, I'm going to turn it over to Socrates.
Well, thank you very much. Sure happy to be here today. I just got back from a long walk here in Chattanooga, and it is nice and humid out there, so I'm happy to be back inside. And one thing I just wanted to touch on in regards to the principles that were discussed at the top of the hour, I can't really reiterate how important those two principles are, specifically cash is king. To me, I really can understand the value of starting with that as number one. Most people, the large majority of people, their number one is profits are king, that returns are king, and that missing out is the worst thing that can ever happen. So that is where Lucid is very, very different from the large majority of other people who are trying to educate you and also trying to guide through these markets by making specific calls. So I really want everybody on this webinar to try to understand why that is the number one principle for Lucid and how important it is in every time that Tyler makes a decision. He is not trying to maximize the returns. He's trying to minimize the risk. By starting out from that foundation, you build much different trading systems, much different objectives for how you're going to accomplish that. And to me, the best traders are the ones that know what entries to pass on. Most people are trying to figure out what entries work best and what entries can always be taken. Is it a green 2 above a green 1? Is it a golden crossover with moving averages? Is it breaking out of the Ichimoku cloud? Any of those can work in the right circumstances and work fantastically, but the best traders know when to pass on them. When do you pass on buying a golden cross? When do you pass on buying a green 2 above a green 1? The best traders, the best practitioners of those systems are going to have very good answers for you. They're going to have very clear parameters for when this entry may not be worth it. So that is something that I want you guys to consider, in the sense that how are you going to decrease the amount of trades that you make? That is one of the number one things that people can do to improve their results. Is if right now you're making 5 entries a week, ask yourself what it would look like to only make 2 entries a week. Ask yourself what it would look like to only make 1 entry a week or every other week, and see the feelings that come up. Are you just speculating because of you like being in action and having to wait 2 weeks to make an entry? Does that remove all of the appeal to trading for you? These are things that I think are very important to consider, and I just wanted to touch on how much I believe in that philosophy that cash is king. And if you can start from that standpoint, you can manage risk much more successfully than almost anybody else. So the markets are made for preserving wealth. They're not made for creating wealth. People that are trying to create wealth through the markets are generally going to end up losing it. People who are most concerned about preserving what they have, preserving the buying value, are going to have a big edge over everyone else. And that's maybe something else to consider, is where is the edge coming from? If you are consistently trading, where are you developing an edge? And I am trying to share my screen right here. There we go. Main screen. Okay, so now I'm pulling up the study guide here that we will be going through today, and we will be providing everyone with a copy after we're done so that you can go back and review. We will be covering a lot of stuff in a short amount of time, so there probably will be a need to come back and refer to this material down the road. So we're going to start out with the archetypes of broadening bottoms and broadening tops. As you'd expect, one is essentially an inverse of the other, and this is going to be the traditional sort of megaphone pattern, broadening bottom pattern, where we have a trend coming down, and then we get 5 touch points in this megaphone pattern, which each touch point is either a lower low than the one before or a higher high than the one before. So a broadening bottom should consist of 3 lower lows and 2 higher highs. So right here we've got the first touch point. 1, 2, 3 is always lower than 1. It always has to be. So there's 3. That's the lower low. Number 4 is always greater than number 2. So that's the higher high. Now we come down and establish another lower low for point number 5. So you could just consider this 2 lower lows and 1 higher high, or 2 kind of higher highs and 3 lower lows. Either, I say 3 because there's 3 numbers. And either way, what's most important is that there are higher highs and higher lows at each touch point. 4 is higher than 2, 5 is lower than 3. Inverse to that is the broadening top pattern. We have a bull trend coming in here, and then we get the first touch point. 1, 2, 3 is greater than 1. 4 comes down below 2. 5 is greater than 3. So that would be the topping pattern. How the easiest way for me to tell if this is a top or is it a bottom is where are the most numbers located. Here we have 3 numbers on top, 1, 2, 3. It's a topping pattern, only 2 below. Up here we've got 3 on bottom, 1, 2, 3. It's a bottoming pattern. 3 up below, 2 above. So for me, I just always look, where's the most numbers? Because sometimes, and we will see this later, we will get something like a broadening top that will occur after a sell-off. So you can't always determine whether or not this is a top or a bottom based on the preceding trend. There will be multiple scenarios where the preceding trend will be down, and then you'll get a topping pattern with 3 numbers on top, which is basically an indication of that, a continuation there, and that's something that we will get into more later. So for me, that is how I identify the broadening bottoms and the broadening tops, and those are the archetypes for each. Anything to add there, Tyler?
No, that's great. Very important. We're already getting into some distinctions that you don't really get when you think in terms of broadening tops or bottoms or megaphones. And that is, we're going to go into several things that can develop out of each of these, meaning broadening tops and broadening bottoms, or Seljen tops and Seljen bottoms, as you will see as we go on. That's what we discovered when we really started studying this over long historical periods. And the conclusions we came to 40 years ago were basically that this thing is very, very powerful, but it will throw you some curves, just the way Hyperwave is very, very powerful, but can also throw you a number of curves. And the more you study them, and the more you look into the details, and the more you try to figure out, what should I be doing? Should I move this line? Should I move that line? What happens if we go further than this up here and then come back down again to a new low? Almost anything your imagination can create, you're going to find actually occurring. Now, what we're going to do after looking at the bottoms and the tops is we don't know yet how to identify 1, 2, 3, 4, or 5. So we want to take a look at that, and we're going to do that by looking at this graphic. This is the way a low or a high is identified in Seljen. We use candles, and there must be 3 candles in the formation. And those 3 candles in the formation on the low must look like this. The lowest point is going to be the middle candle, and we're looking at the wick, not the body. And that lowest point to the left of it must have a candle that has a higher low. And to the right of it, it must have a candle that has a higher low. And once you get this trinity, this triumvirate of these 3 bars in that order, you've got the potential of putting a number 1, 2, 3, 4, 5 on a top or a bottom. That's for the bottom. Now, what's important is you don't know that this is a low. You know on this day if this is a daily candle, or this week if this is a weekly candle, that this is lower than this one. But you haven't seen this one yet. So one of the very intriguing things about the construction in Seljen is you have a tendency to get ahead of yourself. Let's just assume that this middle bar was way lower and we had not yet gone into the next candle. Well, if you've been following sequential, or you've been following Consensio, or other moving averages or relative strength, if this thing fell far enough, you might come to the conclusion that this is going to be the bottom of a possible Seljen buy signal. But you can't do that because you don't know what this one is doing yet. So even though it turns out that after these 3 have been printed, it's only after the 3rd one is printed that you know that this is the possibility of a 1, 2, 3, 4, 5, depending if it's a high or a low. We'll get into the construction a little bit later, but I just want to point out for you how important these 3 bars are. But remember that all candles, or all bars, or all lines in graphics, in finance, run from left to right over time. And therefore, when you get a signal based on something that yet has not happened, you've got to wait. This could have looked like this right up on a stock or an index until 3:45 on a Friday afternoon. And you go ahead and you place money, given the rules that we're going to teach, based on these 3 bars, but then 15 minutes later, the bottom drops out of this candle and you go lower. Now, what would that mean? Just in this one simple example, if this is higher than this, but this one is higher than this, it would mean that you've got to wait another full period to see what happens to the right of this lower candle. And then you would have a higher low here, a lower low here, and wait for another higher low here. Same thing is true over here on the high side. Exactly the same construction. We need the high to be higher than the candle on the left and on the right. And at that point, we can proceed. And with that, I'm going to turn it back over to Socrates.
All right. So yeah, there will be a situation where you could have a three-candle pattern that qualifies as on both ends. So maybe start to see if you can visualize that. Here we go. So this three-candle pattern could qualify on both sides as either the low or the high, because we've got a high that is above the high on the left, this LH lower high, above the high on the right, lower high. So that qualifies as a potential topping three-candle pattern. Then we've also got this low here with a higher low to the left and a higher low to the right. So we can see that this right here counts as the three-candle bottoming pattern with the low in between two higher lows. So what do you do when you've got something like this where it looks like it could be either direction, either or? And the answer is it depends on where it occurs in the overall structure. This is actually a three-candle pattern that has been taken straight from the Google monthly chart, alphabet monthly chart, G-O-O-G exclamation, from November 18th to January 19th. And here it is right here. We see it highlighted. And we use the bottoms, the bottoming pattern, the low between two higher lows, because of where it falls in the overall structure. We see that this wick right here is below this 2 here, which we notice has the same pattern, a low above the low to the left, above the low to the right. So that gives us the 2 count. Now here we are below the 2 with this wick and a higher low here and a higher low here. That gives us the 4 count because we have the three-candle pattern occurring below the 2. So it wouldn't make any sense to use this 3 candles at the top, this high above the lower high, above the lower high. That wouldn't make any sense because it is not above this 3. For this to count as a 5, with these 3 candles here, this high in between a lower high and a lower high, it would need to be above the 3. So if the same exact 3-candle pattern occurred up over here, we would use the tops of the candles for the 5. Since it occurred down here below the 2, we use it as a 4. So that is a big differentiator between Seljen and the traditional Megaphone pattern or the broadening top pattern. It is mainly looking at these trend lines for touch points to determine its count, and it doesn't necessarily concern itself with candle formations. Whereas Seljen is not necessarily concerned with this Megaphone type pattern with these trend lines. We'll see some really funky Seljen setups later on where there's no trend lines that can be drawn. So Seljen doesn't necessarily care about fitting within these trend lines that create the sort of Megaphone type of pattern. It only is concerned with the 3-candle pattern and the higher highs and lower lows. So that is, as I understand it, one of the major differences between Seljen and the broadening patterns.
Yeah, that's exactly right. That's great. And this is a wonderful example because it's a real example that has just occurred and also gives you a clue that maybe we're going to take a more in-depth look at Google in just a bit. You're going to find a number of other differences as we go through this between Edwards and Magee's broadening top, which is really just a general observation, and Wells Wilder Jr.'s Megaphone, and he had other names for it. But this is one of the essential differences. I did all the original Seljen work not using candles. I used open, high, low, close bars. And I like the candles a lot more, but you can use either one of them. But it is very important to be able to differentiate from the bodies of the candles and the wicks, because we have found that it is the top of the wicks and the bottom of the wicks that are the most important in telling you that this particular pattern is beginning to develop to tell you you are at a top or a bottom.
All right, so moving forward here. And we are going to just take a quick look at the NASDAQ in terms of how the broadening top pattern compares to Seljen. So if using the traditional broadening top pattern with these trend lines, you would be waiting for this next touch point to occur well above 8,000, might even be 9,000, maybe even 10. This thing is accelerating very rapidly to the upside. So just try to visualize if this kept going up at that angle, where would the price be when it got there? Something like 9,000 would be about my best guess, depending on the rate at which it rallied. So if using the traditional megaphone or broadening top pattern, you're not getting a signal here for a long time. And it's not really going to be much help until this trend line gets much closer to the price. Whereas Seljen could be providing a signal much, much sooner. And for those that are able to start seeing the pattern, we can see what Tyler was describing here over, this is a monthly chart, a 1 month of the NASDAQ, and we can see that right here, we've got a potential high above the high to the right, above the high to the left. Give that a 5. We've got a low, below the low, below the low, 4. Right here, we've got a high, below, this next one is below the high here, below the high here, and this is below this peak, so we can give this a 3. This is clearly a 2 right here, and then we can give it a 1 right here. So we've been watching this for weeks now, and now we are on the 1st of June, and this candle finally has closed. So it's a great example of what Tyler was talking about earlier. For this entire month, it looked like we were going to get this sell signal with the 3 pattern, the 3 candle pattern, which provided us the 5 count right here. We have been waiting for weeks. While it looked like it was very clear that the price is way down here, how could it ever get back above 78, 79 in 1 week from right here? Well, that's not the right question. The answer is that it can do anything that it wants, and if the candle has not closed, then we need to wait. So here over the last couple weeks, we have been waiting to see where this would close. This chart was created about a week ago, so this probably isn't exactly where it did close, but it did end up closing with a lower high than here. So that gives us a 5 count on the Seljen sell. We've got 5, 3, 2, so the number, there's more numbers on top. That's telling us it is a topping pattern. A Seljen sell signal occurs with the close of this bar, which is much, much different signal than you would be getting if using the traditional megaphone or broadening top pattern. So that's something we've been keeping a close eye on. If using the monthly chart and waiting for this signal to come in, it could be a good option to go ahead and zoom into the weekly and look to see if the pattern has occurred on the weekly and that the signal has therefore already happened because the weekly was able to close with that pattern. That could be an option here. However, that is something you want to be very careful with, and you want to have a very clear understanding of what time frames you're trading. If you trade the monthly chart, then you shouldn't care too much about signals from the weekly. If you trade the weekly chart, then you shouldn't care too much about signals from the daily. Again, we started off by talking about knowing what signals to pass on, and if you're the type of person who is too impatient to wait for the higher time frame that you want to be trading, so you're consistently zooming in and taking signals from the lower time frame, that's pretty much the opposite of somebody who is basically looking to stay out of the market. Now we're anxious and looking to get in or front run a signal, and that is something that can be viable, but is not necessarily going to be the best approach. And if you do decide to zoom in certain circumstances, have a very clear understanding of why you're doing it and when it could be overdone.
Yeah, that's a great overview of a real-time chart. And we're going to go into a lot more detail about these real-time Seljen positions that we are seeing later in the presentation. But I'd like you to all consider something that Socrates just talked about, these last two candles. Now, we've already known that we had a 1, 2, 3, 4, and we're waiting for a 5. And for a long time, it didn't look like we would get it because it looked like this was going to keep going down. But we did end up with this trend line at the wicks. And then we started up in December, and we've been going up ever since. Well, none of these bars are very exciting if you're looking for a Seljen sell signal. Why? Because you've got to get above these highs, the old 3. You've got to get above that 3 before you even start looking for a 5. Well, we did it on this bar. This one closed out. We closed up here. The wick was clearly above the 3. And this was clearly lower when this one closed. We have lower highs to the left. That means you've got a month to go after this high was hit before you could possibly get a signal. And it turned out that you can't tell here, but the wick on this red candle is lower than the wick on this green candle. But you can see how close we came to going a little bit higher. If this candle had just gotten a tick higher than the high of the candle to its left, that means you've got to wait another month at least, and probably 2 months before you can get a signal. Now, I'll just say from the beginning that I use weekly candles for all of my Seljen trading systems. We're looking at a monthly, mainly to show some important things that the longer term is always more important than the shorter term. And I'm going to just take a second to pause again and talk about Lucid's principles of investing. We did number 1 and number 2. Number 3 is that trends can be short a number of days or weeks, intermediate a number of weeks or months, or long term a number of months or years. These programs of Hyperwave and Consensio and Seljen are designed for those long-term trends. I know a lot of you are using them on shorter time frames, and some are using them successfully. I don't do that, and I'm not saying they don't work. What I'm saying is they are designed for long-term investors. Number 3 was trends can be short, intermediate, or long-term. Number 4 is very important in our set of principles, which is only long-term trends are investments. Now, I know that's very difficult for people to internalize, but I deeply believe that for a number of reasons, one of which is that a long-term trend tends to stay in motion for a length of time that allows you to make rational decisions. An intermediate term trend might, but possibly won't. And a short-term trend never does. Day trading and speculation have no predictive value over longer time frames. They are basically random noise that, yes, you can take advantage of. But I'm trying to distinguish between what the objective of using these principles are and the tools that I've designed for those principles. So going back to the chart again, what's interesting to me now is because we know that this is lower than this, and this one is higher than this, that as of last night, or as of the end of May, this is a finished candle, which means we have now completed the triptych. These three candles now qualify to put a 5 above this candle, which makes a long-term investor nervous about being long the stock market, particularly in this case, the NASDAQ. And we will go into much more detail as we go on here. And with that, I'm going to turn it back to Socrates to go to the next slide.
All right, and yeah, one thing to touch on real quickly is many patterns and indicators are meant to work across all time frames for all asset classes. That is traditionally what you'd expect with technical analysis. But for a second, I want you guys to think about the pattern we're talking about today. And if you were to see this exact same pattern occur on the 4-hour, the 1-hour, or the 15-minute, would it have the same implications? I'm not saying that it would or it wouldn't. I'm asking you to think about this for yourself. And I want to start with the basis of what this pattern is really telling us. And this is really a major reversal pattern that is most well used for higher time frames, for major trends, for long-term moves. Getting a broadening top pattern on a 15-minute chart has significantly different implications in my mind than getting it on a monthly or a weekly, especially if it's following an enormous move. So potentially the rules that we are going over today could all be used on all different time frames. However, I'm not convinced. Of course, the higher time frames are always going to be more reliable, but since this is a pattern that's specifically concerned about major tops and major bottoms, then would it be as effective to apply these rules to this pattern that occurs on lower time frames? I'm not convinced, but it is something that I will be thinking about, and I want everybody else to consider themselves and maybe even experiment with to see. At the end of the day, it's all theories until you get down and actually put some money to work and see what happens. So now we are moving down to the same chart. This one just has the numbers labeled. Before we were just looking at the trend lines. Here I used a question mark next to the 5 because the candle had not closed yet. So we had the 1, 2, 3, 4, and what looked like a qualified 5. However, we're waiting for the close. That's a question mark. Nothing is signaled until this candle closes. Moving on down, there will be times when you need to adjust the count, when it doesn't happen exactly how we want, where we do not get another lower low following the higher high. This is one such example. This is Wells Fargo and Company on the weekly chart, looking from 2015 to current. So we are taking a look at this blue arrow, which illustrates a qualified 3 that needed to be adjusted because we did not create a lower low. So we're starting right here with the 1. this candle here higher than the 2 to its side. Here we've got a clear 2, a low with 2 higher lows on each side. Here, this blue arrow represents what was a 3. Think about this as if it was real time. Delete in your mind everything to the right of this arrow. And imagine that this is real time right here in about April 2017. We got the 1, we got the 2, and in comes a higher high. We got this wick up that's clearly above the 1 and clearly has 2 lower highs to the right and the left. So when that happens, what do? You draw a 3 and you expect, or you at least wait for, a 4, which would occur with the 3 candle pattern like we see here, a low with the higher low to the right, higher low to the left. That's the pattern we're waiting for, but it has to be below the 2 or it does not qualify. So this blue arrow in real time, that's a 3. And then we're coming down, we see this kind of reversal happen. We cannot label this a 4 because it is above the 2, clearly. Okay, so instead of coming down below the 2 to give us an actual 4, what happens? We take out this high. We rally off of here, we take out this high, and then we get the kind of 3 candle pattern that is maybe a little tricky to recognize because the enormous gap that it came off of. So right here, this red candle, the wick is the high, above this candle to the left, and then whatever we got down here, this is clearly higher than that. So now we have a new 3, which has occurred because we created a new high above this 3 without creating a new low below this 2. Okay, so now we have this 3, and I want you to understand that this would not cost you any money. We're not trading the 3. We're waiting for the 5. So if this was to occur in real time, it's not going to cost you any money because there's no signal to enter or exit on a 3. Something very important to keep in mind. Let's say, just for example, that this was a 5 and that this blue arrow did signal a short entry. Then this would be a situation where you're likely going to get stopped out, maybe at a small profit, maybe at a loss. That is why we will go over the stop loss system later on so that you will know how to handle this if this was a tradable number, specifically a 5. So since that was not, it was only a 3, we're not losing any money, and we're just waiting for the next 4 to come in. Here we got it. And now if a 5 was to occur above this 3, it would give us a signal to sell. And until then, this is just an example to show when the count needs to be adjusted. Look over here at the 2. This would have gotten adjusted a couple times because we came down, created the pattern, but didn't get above the 1. So adjusting the count when you're not in a trade does not cost you any money. If this happens after a 5, then the stop loss will likely be triggered. It may cost you money. It may get you out at a small profit. So that is what I have there.
That's great. And I'm sure some of you have already noticed that on any of these charts, we started very simple with just 3 bars, and now we're spreading out where there's hundreds of bars. You can find this pattern in a lot of ways. And what we're trying to teach you today is picturing it so you know what you're looking for. And what I mean by that is, let's assume for a second that this is a 5. You will go up and look for a 4. Let's make this a 4. You will go down and make a 3, but the 3 must be higher than the 5. And in this case, it is. So now we have a 3. And now you go up looking for a 2, and this becomes a 2, which must be lower than this 4. And now we're looking for the 1, and that's easy. Take your pick. Any of these, as long as they are higher than the 3 and the 5, give you a 1, 2, 3, 4, 5 bottom right here. Flipping that around, let's call this a 5 top. This is a 5 bottom, and it's a good 5 bottom. And you'd be long this trade if you took that 5 bottom. This is also a 5 top because this is a 5, 4, 3, 2, and a 1. 1, 2, 3, 4, 5. It's also, this is a 5. 5, 4, 3, 2, 1. And you begin to see something very interesting, that at almost all actual peaks and all actual bottoms, it's almost always possible to go back and construct. So what we're trying to do is get you to picture not this kind of chaos, but in a move that has been going in a long-term trend for a long period of time, how valuable it is to be able to tell when that long period comes to an end. And you will see that as we get into more detail. But I just wanted to point out, because I'm sure some of you might have noticed that on Wells Fargo, there's all kinds of things going on in this chart. This is a spectacular head and shoulder top right here. This is a neckline. Here is the right shoulder. Here is the left shoulder. Here is the head. We broke the neckline. That gives us a target much lower than what I just showed as this 5. But that target on this head and shoulders top is interrupted by a Seljen buy signal, and it turned out to work. Now, there's a way of putting stops in, because it now appears that this is headed back down for its eventual target at much lower prices. And we will show you how that this particular pattern would be stopping you out right in this area in just a moment, with either a small profit or a break even, maybe a small loss, but as you will see later, all of those things are at play. Okay, it's already 1 o'clock. We have gone the first hour. We're trying to go very slowly through the basics before we get into actual examples, and then a number of things you're going to have to keep in mind in terms of interpretations, which we will get to in the next hour. And then in the third hour, we will get to active, quite scary examples that if I wasn't spending so much time on Consensio and Hyperwave and Bitcoin and other things, I would have hoped I could have picked up earlier. But when we decided after Socrates and I began looking at some real life examples, I think it's beginning to tell a story that you're going to be interested in, and you've got a way to take advantage of it. So we're going to just take a couple-minute break, and Leah is going to pause the recording. We will be back in about 4 or 5 minutes. Thank you. Okay, we just took a look at Wells Fargo, and we are going to go back to that chart. Socrates has got a couple of things he wants to talk about, and then we're going to move to another Wells Fargo chart that shows a bottom on Wells Fargo back at the bottom of the financial crisis back in 2009. So we will do that right now.
Sharing the main screen, and hopefully everybody can see this chart that we left off with. One thing that I wanted to ask Tyler was in terms of how this pattern stacks up against other major sort of topping formations. So here we see the head and shoulders, which occurred, this is the weekly chart. So this is a massive topping pattern with this head and shoulders. It started in 2017 and went through towards the end of 2018. So I'm curious what Tyler thinks in terms of a hierarchy of these topping patterns. Where does Seljen compare to something like a head and shoulders?
Yeah, that's a great question. It's a lot more reliable in my mind that when you get a 5 top as opposed to the breaking of a neckline of a head and shoulders, I would go with the 5 top for a couple of reasons. One is it occurs very early. Let's just assume that this is a 5 top. You get out almost immediately. In this case, you had a huge dump with a giant gap in between. But notice you don't form the head and shoulders until you're all the way down at 51. You could, if you were front running this 5, waiting for the signal of the close of this week, go ahead and get out on this week as long as it was actually lower than the candle before it. It wasn't, because it went higher and you had to wait another week for that signal. But even on that week, you are getting a sell signal in the $5,700 to $5,800 level, as opposed down at the neckline at 51. So it tends to be a much earlier signal. I can picture, if you were to put Consensio on this, that Consensio would be very confused throughout this entire period. And the reason is because of all this fluctuation up and down, which would tend to flatten all of the moving averages, something like this, which means that signals are very difficult to get to, as opposed to this one that is attempting to call the very tops and the very bottoms as they are occurring. Now, I am a big fan of a head and shoulders when it breaks. But in a very large number of cases, you will get a head and shoulders pattern like this that doesn't break, in which case the movement is very often in the opposite direction that you were expecting in a very large pattern, which means it's almost suicidal to try to front run a cup and handle or a head and shoulders or inverse head and shoulders, because you will be punished severely if it does not continue in the pattern. Whereas again, Seljen has the ability to get you short or long right at the beginning of the next move.
That's a great answer. Just one other thing to touch on is I'm hearing that Seljen would be preferred to most other major patterns, major reversal patterns, in the sense that this head and shoulders, you're not getting in until somewhere in this sub 50 range, whereas Seljen could potentially get you in. This is a unique case, this gap down. So let's just say, you know, up here would be much more common area for the next candle to close, somewhere in the $62 to $63 range. So that's almost a little more than 20% better of a price based on the way that Seljen would have you enter. So you prefer Seljen because it gets you a better price, but what about the reliability of it? The head and shoulders, what's nice about it is that it's very reliable when that neckline does break down. We're talking in the order of about 70–75% of those will end up reaching the target from their measured move. So that's another thing that I really like about the head and shoulders pattern, is that we can measure a move to provide a profit target. So here we would take the length, the depth of this head, which is about 51 to 66. That's about a $15 difference. the target would be around $35 after we break down here. So I like the Head and Shoulders a lot because it is very reliable. When this thing breaks down, there's a high percentage of chance it's going to reach the target. And I also like it because it provides a target. It gives me an idea of where I want to be taking profit and where this move could become exhausted. So in terms of Seljen, as I understand it, we're not really getting profit targets, and I'm not very sure about how reliable that signal will be. Is that something that you can touch on?
Yeah, we will do that probably in the next hour, maybe later this hour, when we look at some of the charts about how going from a 1, 2, 3, 4, 5, you often find that you get a series of 5s in a row. They go higher and higher and higher. And you have to make a decision. Are you going to play each of those? Do you have any other tools available to you to tell you which is the ultimate high? And the answer is yes, there are ways of doing that, but you need to learn them. You've already learned some of them. Consensio is a great way of doing it, but there are others like the sequential system. Just picture for a second, if you've got a 1, 2, 3, 4, and you're moving up into a 5, and it looks like you've got a 5, but you're only on a 2 or a 3 or a 4 on a count, either a countdown phase or the actual count itself. To me, it would make sense to wait for a 9 or wait for a 13 on a countdown before you actually put money into the trade. So that's why a number of tools are important for all other tools as a means of double checking and triple checking why you are taking money out of cash and putting it into something or attempting to get out of something. If I was in a 5 that could possibly be a terminal point, I'm perfectly willing to sell out of a position, get back into cash if it was a top. I would be very reluctant because of what I just said about the tendency for 5s to repeat themselves until the ultimate one occurs. I would be very reluctant to stay in a declining asset, thinking that maybe the 5 that I'm getting is a buy signal and therefore jumping in too early and taking cash and putting it into the next trade.
All right, excellent answer. And we will move forward to looking at another Wells Fargo chart. This is on the monthly and is from 2008 to 2009. So anybody familiar with what was going on during that time? This is immediately after the financial crash, and this is a financial company, being Wells Fargo. So this is a chart that is very important for a number of reasons. If you want to go ahead and talk about it.
Yeah, this is one of the most important periods in U.S. financial history for a lot of reasons, but particularly in the financial markets and the stock markets and the mortgage markets and the bond markets. And we won't get into how close we came to the macroeconomic disaster that what this chart shows in detail almost happened to world economies. But here is a very great example of where fear is building as markets are rolling over. Big banks, some of the biggest in the world, are rolling over. All kinds of news about Bear Stearns and Lehman Brothers and others. We get a pop at the end of this period of time in 08 going into 09 that takes Wells Fargo stock from about $21 up as high as about 40, about a double. But all that did is put a 4 in place on a broadening top. 4, 3, 2, 1. And then what happened, this is a weekly chart, by the way, is we drop from $45 down to $8 from $45. And we get a 5 that is a buy signal on the immediate candle to the right, which if you waited for the close would have been up around the $12 or $13 level. That shows once again the ability of this thing to call tops and bottoms. But I would also note that if you shift the way I did on that last chart and make this a 5 and make this a 4 and make this a 3 and this a 2, that right here is a 1, giving you a 1, 2, 3, 4, 5 top at the precise top of that movement that took us all the way from $16 up to $44. And then on the candle to the right of that peak, you have your evidence that this, the bottom of the candle, the weekly close at 36, has given you a 5 top that you could have ridden all the way down to the bottom and then ridden this up from the ultimate bottom of not only the recession and a macroeconomic disaster and a mortgage market disaster and a bear market that took the NASDAQ down 80% and the S&P and the Dow between 35 and 50%. You precisely pick the top and the bottom using the Seljen Trading System.
Absolutely fascinating. So let's go ahead and move on to the next. So this is given an idea of completed patterns. After we went through how to determine the counts, I just wanted to show a couple patterns from the past, and the Wells Fargo was illustrated for a bottoming pattern, and as Tyler pointed out, that I did not originally see, could also get a 5 topping pattern here. So this is the topping pattern that kind of was experienced around the same time with JP Morgan. So here we see kind of what we saw here. This is, so right here, this is 2000, into 2008, we get this rally here, which puts in what I have labeled as a 4, but could actually be a 5 based on what Tyler went through with you there. So here, I think we've got a similar situation towards the end of 2008. We get this big rally that started around $29, took us up to above 50. So not quite 100% like Wells Fargo, but still definitely a significant increase. And then by using the topping pattern, we can see how a signal would have occurred right before that major sell-off that began 2009. So we start with this candle here is our 5, a 4, 3, 2, and a 1. Those are all pretty easy to recognize. And then we see that this 5 actually would not have been confirmed until this closed down here around $31 or so. So this is a monthly chart. I think I misspoke on the previous one, which this kind of illustrates why the weekly could be the preferable time frame, even though it's a strong rule of thumb that higher time frames are always more reliable. Sometimes the price just moves too much and that you get better entries in terms of risk reward if you're using the weekly. So here we see the entry isn't really signaled down here till 31. We'll go over the stop losses later, but it would be a large stop loss that you would have to be taking in terms of percentage. And even though this looks like a big move that came off the 5, it really wasn't all that great once you take a look at where you'd actually be entering in. Now think of the weekly, this bar right here, that's 4 weekly candles. So it's potential that the weekly signaled some sort of sell in this area. So something to be thinking about when you are determining what time frame you think is best. Tyler and I often use different time frames. He likes the weekly, I like the 4-hour and the daily, but I always refer to the weekly when I'm looking at major reversals and major patterns and major boundary lines. So for me, I like the weekly a lot myself on this, even though I prefer shorter time frames for the most part. So for you, I think that you need to look at some charts yourself after learning the rules and the guidelines. Don't just go off of what we use because you think that it must therefore be best. Give it some thought yourself and think about, is the monthly going to be a better time frame for this? Is the weekly? What about the 3-day? Why not try a 2-week? Really diving in deep and back testing and experimenting and tinkering is how you're going to really internalize the concepts and then potentially have some unique insight which allows you to not only capitalize on the system that we're sharing, but potentially do even better due to an indicator that you decide to complement it with, or due to the time frame that you decide to implement it on.
Yeah, that's great. And again, what I would point out, as we did on the other one, first of all, on this weekly, monthly thing, I like using the monthly as a searching tool because the pattern just jumps out at you. Sometimes the weeklies are too detailed and you've got to really get it down and even break it down to the dailies to see the highs and lows in the movement. I like the trading of the weekly only because of a lot of tests that we did 40 years ago on them in terms of the reliability. This was built as a commodity trading tool. And commodities tend to be very, very volatile and pretty illiquid in most cases. Therefore, they're more like a crypto or a gold mining or gold and silver or a currency than they are stocks and big indexes. And we settled on the weekly and did all of our algorithms based on that, programmed them all, and then we actually ran over 40 different commodities on a daily basis using the system you're now seeing, the Seljen Trading System, being either long or short. So that's those are important points. The next point is, just as we did on the previous chart, put a 5 down here at the bottom because it's very clear that you've got 2 bars on either side of it. Go back to this, make this a 4, a 3, a 2, and a 1, and you've got a 1, 2, 3, 4, 5 bottom, just as you had a 1, 2, 3, 4, 5 top. That is not unusual for Seljen. This is it. Because these are such gigantic bars, you don't really get the scale of this. This is 14 at the bottom, and this is 51 or 52 at the top. These are huge percentage moves. And if they were done in little pieces where you could blow them up, as opposed to these huge bars that run from 40 down to 30, all in one bar, it would look very differently. If you switch to a weekly, as we did up here, where you get a lot more detail, this is the weekly Wells Fargo. Now you can begin to see the tops and the bottoms developing a lot better with much more granularity into to your decisions when you actually get in and get out. So those are all great observations, and we are now going to move away from JP Morgan and talk about another unusual aspect of Seljen, very rare but a lot of fun. And I will just go through this quickly because of something we believe we are seeing right now with the S&P 500. And I wanted to spend a couple of minutes on this chart, forgetting the fact that this is one of the biggest indexes in the world and the most important indexes in the world. And what you obviously can tell is implying something that is unhealthy, and also implying something that was very healthy that some of us were able to catch. I'm going to go through this in just a moment. But I want you to try to figure out in your head, with whatever experience you've got in markets, what is this telling us about what's going on between buyers and sellers? And why is this such an unusual pattern most of the time? And you don't see that many of these most of the time. And Socrates and I have had a long talk about this, and I'm still thinking about it. I've thought about it for 40 years because it does not make intuitive sense. It flies in the face of a lot of theory having to do with the way markets work, efficient market theory specifically. Because look what is happening. Let's make this a tug of war between two groups. You know, one in red and one in black. And it's a tug of war. And there are equal sides, meaning 10 men or women or both on both sides of the road. That's the way I look at markets. That's the supply and the demand. It's the bullish forces and the bearish forces. And what they're trying to do, both sides are trying to beat the other side. So let's come over here to this little 1 and this 2. We've been in a long uptrend for a long period of time, 10 years, 8 years, 9 years. And all of a sudden you get this little weird 1 followed by this little weird 2. As defined by Seljen. The little weird 1 went higher than the candle to its left and was higher than the candle to its right. Immediately followed by a candle that was lower than the 1 to its left and the 1 eventually to its right. What just happened there? Well, the same thing that happens in all markets. It's been going up and it corrects. Here it corrects for 3 weeks. This is a weekly chart, goes flat and then goes up again, then corrects with one weekly little funny thing and then goes up again, and then corrects with this one little funny thing, which has got all kinds of names, you know, spinning tops and dojis and funny things and all of that kind of stuff. But what happened here is the price went higher, but the candle was red because the opening and the close were different. And then it was followed by this one where the high never got back to the high the week before, which was then immediately followed by this big green up bar. Well, that's just a normal correction. And number 5 on my list of lucid principles of investing is long-term trends all contain short and intermediate counter trends. So you cannot show me any long-term trend that does not have short and intermediate term counter trends in it. this downtrend had a 6-week counter trend within it. This almost had none, but there was a 4 or 5 week period where no progress was really made. So that is a principle. And unless you know that principle, along with principle number 2, that all asset classes trend up and down, if you are a Bitcoin maximalist before 2017, and you didn't live through 2011, 2012, 2014, 2015, you came on after 2015, you really did believe that there were no such thing as trends in Bitcoin that would come to an end. Now we still have people that don't believe it, even though we dropped 85%. Every asset class trends, and whichever way the trend is going, it is going to end and it's going to reverse. Every asset class. Okay, so now what we're looking at is a weird formation in which here's what begins to happen. The bulls win and the bears take over. The bulls win and the bears take over. The bulls win and the bears take over. And then in this thing we call Seljen Prime, the bulls take over once again from a very, very low point, and they take it to a new high. What is happening there? It's almost as if, obviously, supply and demand are not in balance. They're wildly out of balance, but they quickly shift and alternate from bullish to bearish, erasing all of the gains made by the other party, or institutions, or countries, or central banks, or money managers. That's why this is such an unusual pattern, and you don't find it very often. It's totally counterintuitive that markets could act this way. But regardless of what conclusion you come to as to the why behind this pattern forming, the result of it forming, we want you to walk away from this webinar being completely convinced of the power of this to help you make decisions at precisely the right times in even the most volatile markets. So this 5 is confirmed with this candle. And you got to ride this down from 2,940 down to an ultimate low of below 2,400, 2,300. A devastating drop in the market. You were out of your long positions, which, by the way, you had put in all the way back 10 years earlier, and then using things like Consensio in the first part of this formation, raised some cash, and then got all the way back in, then raised some cash, and then got all the way back in, 50% on this part, and 100% since April 1st up to the peak. But now look what this thing is telling you. This high is confirmed on this close at 2,880, because this high is higher than the bar previous to it and the high after it. And again, this is weekly. This is the S&P 500. This is the 500 most important, in general, stocks supporting the most important economy in the world. And it is giving us a very unusual signal, which is called Seljen prime, which means there are four numbers on the top and 3 on the bottom, as opposed to 2 and 3 in a normal Seljen system. Now, we can do the same game we did before. You can make this a 5. And I was asleep at the switch. I went 50% in, but not until fundamental things happened with Powell and the Fed reversing course on what they were going to do for interest rates. Consensio on this kind of a spike down is lagging way behind. There is a hyperwave line on the S&P that's a 3 that's below this action that didn't help you. But this would have gotten you in on this candle because this is a 5, this is a 4, this is a 3, this is a 2, and this is a 1. And we should have been all over this on this candle on this close. Because now you've got a low, below a low, below a low, and that gives you your 5. So anyway, very, very important chart, not only from learning what Consensio is and does, Seljen is and does, but why I was not too reluctant to front run to a certain extent Consensio off of this top. And we went quickly from 15% to 25% to 50% out of the market now. But a lot of it is that this 7 is staring me in the face. We're only looking at the S&P 500. And later on today, we're going to look at other stocks and other indexes. Okay. Socrates, any observations on this?
Just want to summarize really quickly. I know that this can be kind of complicated when we're trying to change the counts without actually doing it, and you're having to visualize it in your head. So I just want to go over real quick what we discussed to make sure everybody is understanding it. Hopefully I make it less complicated instead of more so. So let's take a look back at the JP Morgan chart. We remember that Tyler said we could put a 5 down here at the bottom. 5, 4, 3, 2, 1. That is completely valid. However, instead of putting a 5 down here, what we could do is put a 6. Okay, so that is going to be a Seljen prime. Anytime you get another count after the 5, then that tells you that you are in a Seljen prime setup. So basically what we can do here is now input a 6 down here, and 6s are tradable. 5s, 6s, and 7s are tradable numbers. So really what this 6 represents, if you can try to visualize, this 6 represents a 5 bottom. That's why it is a tradable event. Since we have the 5 up here and this occurring below the 4, we input a 6, but it would be perfectly valid to, as originally discussed, have this as a 5, 4, 3, 2, 1. So the rules are the same and they apply the same whether or not you're labeling this a prime 6 or whether or not you're labeling this a 5 bottom. It's all the same. We're waiting for this to close and we're going long. Even regardless if it's a prime 6 or a 5 bottom as the way that you are drawing it. So that is what we're getting here. We've got the 5. That is a tradable event. We enter and it works out fabulously for us. And now we get what is labeled a 6. Well, what if we said this is not a 6 and it's a 5 instead? Let's just go through those counts really quick. Label this a 5, Up here is now a 4, here's a 3, here's a 2, and here's our 1. So when you see a 6, I want you to start visualizing it as it could be a 5 that is inverse to the one that came before. This is a 5 top. We come down below this 4, we label it a 6. That is synonymous to a 5 bottom, is the 6 here. Okay, so I just wanted to reiterate what we're seeing when we enter a Seljen prime setup, in the sense that why is this now tradable, in the sense that we just had a topping pattern and now you want to go long. Well, the reason is because really this is a 5 bottom after the 5 top. And you could take that one step further and say that now this is another 5 top, 5, 4, 3, 2, 1. And that's originally how we had it labeled until taking a second look at it. So essentially the same rules are going to apply for the 5, the 6, and the 7. The 1, 2, 3, and 4 are not tradable events. They're telling you to keep an eye out for a qualified 5. Once you get that 5, now we are going to be using a trailing stop system that will be following the position. And as long as that trailing stop has not been triggered, we are going to be staying short. Once the trailing stop is triggered, now we can potentially look to go long off this 6. Now that is getting ahead of myself just a little bit, but I want you guys to start visualizing what this 6 and the 7 really means. So that's what I wanted to talk about there.
Yeah, that's wonderful stuff, and gets me thinking again about the fundamentals behind what's going on here. You know, you can think of it this way. Over on the left of the chart, just remember that there's another 7 years of upside action, not shown on this chart, but it's there, and investors know it, money managers know it, people that have retirement accounts know it. It's been a great run. But after a great run, you start getting articles and speculation about how long can this go? It's already almost the longest in history. We're going to go into a recession. We're going to turn around. So you've got to keep in mind the fundamentals behind these patterns. We go all the way up to this top, and it's the beginning of 2018. We've just gone up 21% in 2017. Corporate earnings have just gone up 22% in 2017, and the stock market went right up with it. And people were projecting much, much higher highs, and then all of a sudden, in a very short period of time, 2 weeks later, we have given up 10 weeks worth of upside progress. Well, what happened there? Well, a bunch of stuff happened there, having to do with Donald Trump and trade issues and NATO and investigations and new tax policies and all kinds of fundamental things were going on. Plus, we now had a handover of control at the central bank, the Federal Reserve, between Janet Yellen and Powell. And it sounded pretty good, and Yellen had taken us for many years through an upswing by keeping interest rates low, but all of a sudden people start talking more and more about increasing short-term interest rates. So you begin getting wild volatility. In other words, the bulls that are pulling in on one direction, all of a sudden one of them slips and falls. And now it's 10 on one side and 9 on the other side. And quickly the bears take control until the guy stands up again. And now you've got 10 for 10, and they are slightly stronger, and someone on the bearish side slips and falls, and the bulls run and go crazy. And that's what is happening as you go to higher highs. I could say the same thing about just a volatile market that's going sideways, as we saw in 2016 and 2015 and back in 2011 and 12. Basically, we didn't run up to new highs and then go quickly down to lows and then back up to new highs and then down to lows. So I want you to picture this Seljen pattern as number one, very unusual, but number two, as when it occurs, as being one of the most powerful tools you've got to either exit or enter positions out of every technical system I've ever studied.
All right, and I'll just add my own brief analogy here in terms of, I've given this a lot of thought too, about what's happening. And for me, I think of these topping patterns, these major topping patterns, like a heavyweight boxing match. And thinking of each of these as kind of like a round. Like here, it's a very slow start, and then boom, all of a sudden the reigning champ, the Bulls, we're in a bull market, has a huge round. And then it's responded by the challenger taking control and having a huge round. And then it's just this back and forth where something's going to have to give. You can't get beat up this bad continuously without somebody losing the fight. And seeing like a 6 and a 7 is kind of makes me think of like a title fight where there's a couple extra rounds. This thing has been very even, and we still don't have a winner decided. The Bulls are very resilient and tough, and so are the Bears. They're not going anywhere. So in this sense, we've got a couple big knockdowns. We're getting towards the final rounds of the match. Something is going to have to give here. We can't forever continue on this lower low and higher high pattern. So that's kind of the analogy that I think of when considering this pattern. And we are going to take a look at a couple other major U.S. indices really briefly, just to examine, is the S&P the only one experiencing this broadening top pattern, or potentially are the others as well? Here we have the NASDAQ 100. We can take a look at the very similar setup: 7, 6, 5, 4, 3, 2, 1. Very, very similar to what we're seeing in the S&P 500. Don't need to spend too much time on this because they're very similar charts. This is the NASDAQ Composite, ticker IXIC. We're seeing the same thing. 7 is above that 5. 6 here below this 4, 5 above the 3. Here we notice this 5 would have needed to be adjusted. This was a qualified 5, but this did not come down and create a new low below the 4, so we adjust it. It might have been a couple times where it needed to be adjusted. That will happen. And then we have the 1 and the 2 back in here in a very similar pattern. Is there anything you want to say about the NASDAQ?
Only that in the other charts we just looked at, this 1 and this 2 is very intriguing to me. Because first of all, it's very easy to miss. And secondly, look what the beginning of the pattern wrought. In other words, what it created, these little tiny moves. And each one of the subsequent moves from that point began this alternation, each one of the legs getting bigger and bigger and going higher and then lower than the one previous. It's almost like seeds were being planted at that 1 and that 2 that began to sprout, bullish seeds as well as bearish seeds. And maybe I'm reading too much into it, but I have seen that pattern before on the development of normal Seljen 5 counts. But the fact that these are all springing into these 7s, and what's the difference between a 5 and a 7? Well, the answer is on the right-hand side of this chart. It's an enormous drop to get below the 4. And it's an enormous increase. Everyone's saying this is one of the most unbelievable increases in US stock market history without really corrections. Notice there's 2 red bars on a weekly basis after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 bars, and only 2 of them were red. And neither of those were back to back. Those 2 were separated by a giant green bar. So what I'm saying is that something wicked this way comes, which Leah and I have used over and over again, originally having to do with Bitcoin beginning its tremendous drop. It is too early to conclude, as you will see when we get to the stops, what this means. Is this the beginning of a massive bear market? Should you be lightening up on long positions based solely on this? What do other indicators say about what is happening right here, right now? Longer term indicators. What does Consensio say? We know the answer to that because you've followed me raising cash over the last 4 weeks. What will it take to be 100% on this? This is 100% short off of Seljen. 100%. You should not be in this. And if this was a 7 bottom, I might not be 100% long. Why? Because I'm taking cash and putting it into something. In this one, I've just been given a giant gift from 6 up to 7. If I hadn't gotten out from 5 down to 6, you are actually getting out higher than 3, which people were questioning might be the end of the bull market. So again, and I'm just going to give you another one of Lucid's investing principles. Number 6, the loss of money is not equivalent to a loss of opportunity. And more importantly, a 50% gain is not the inverse equivalence of a 50% loss. If you don't believe that all trends come to an end, if you don't believe that an uptrend is much more important to an investor than a downtrend in terms of adding to your wealth, then a lot of the things I'm saying are not consistent with the way you look at either speculating or investing. But these are the principles that I have used and learned through trial and error, a lot of errors for many, many years, to develop these systems as a way of allowing you to take advantage of this thing that's staring you in the face right now. This is a once in a generational chart. Maybe 2 generations, maybe 3 generations. We don't know the full implications of it yet, but it's screaming out a story, and that's the story we thought it was important for us to tell you in the form of training to recognize the power of what this thing is saying, this thing called a Seljen formation. And with that, what we're going to do, we're ending our 2nd hour just about 2 o'clock. And we are now going to spend a lot of time in the next hour on real life situations, many of which many of our followers are trading on a daily basis and a weekly basis. And we're finding some very interesting practical uses of this Seljen system. We also need to get into the details of how does the stop and reverse points work on this, where are they placed, and how do you change them, and what is your buy signals and sell signals. So We will be back in 5 minutes. Socrates has got a great presentation on the placement of stops that will go through sequentially so you see how they actually work real time. And then we will spend the remaining time looking at real-time examples of Seljen signals that we're getting today. So with that, we will see you in a bit. Okay, welcome back, everyone. This chart is scaring me, I must say, and that's not what we were intending to do. But we now need to take a look at how do you enter and exit this thing, and why and where and what are the pitfalls you've got to look at. So I'm going to turn it back over to Socrates.
All right, I will be getting the chart up that I'm looking for and sending it over. We might be going a little bit out of order for how the study guide is set up, but that is quite all right. There is written descriptions for everything, and we may have time to circle back, but for now we will be looking at entries, exits, and stop losses, and then potentially we'll be able to go back and look at some of the active patterns that we are seeing right now. So let me share this screen. Okay, so Seljen uses a proprietary trailing stop loss system. As far as I know, this is unique, and Tyler and Dick Self came up with this specifically for the broadening top pattern. They tested a number of different strategies and also had a number of different methods to confirm that this is going to be a good system for keeping you in while it's moving in your favor and getting you out as soon as there has been enough indication of a reversal. So that's really what you want with a stop loss system, is that it's keeping you in for the trends that really are working out in your favor, and that it furthermore is going to be trailing such that your unrealized profit will be protected by the stop loss moving in the direction that the trend is going, so that when it reverses, it doesn't come all the way back down to where it was initially set before triggering, but allows you to realize some of that profit before it is all taken away. So the first thing that we want to look at for the stop losses is understanding the interval, because that is what's going to be used to set the initial stop loss as well as trail it. So to figure out what the interval is, it'll be different for every asset. You will want to look at the scale on the y-axis. So here we notice that y-axis is price, x-axis is time. So here over on the y-axis, we notice that each individual square that is superimposed onto this chart, it's more of a rectangle, each of these are separated by $100. Let's look here. There's $6,800 here, $6,900 here. That's a $100 difference. Next level up, 7,000. That's $100 difference. So every interval on the x-axis for the NASDAQ is, excuse me, the y-axis is $100. That is the interval. So that is the first thing we need to determine when looking at stop losses. And we mentioned we're going to look at entries and exits as well. So that is something that we have pretty much covered, but just very briefly to make sure that everybody is following along. We're looking for the 3-candle pattern and waiting to enter until the 3rd candle closes. So that's for the the entry right here. We'll just go over the entries really quickly. We remember this was a 7, and that was confirmed on this candle here because we needed the higher high above the lower high to the left, above the lower high to the right, which didn't qualify until this candle closed. We don't know what's going to happen before the candle closes. Anything could happen. It could close up here, and now it's no longer the 3-candle pattern we need. So right here on this close is where the short was signaled, okay? And then if we're looking back here for the long, we should know that the long would be signaled right here because it is after the 3rd candle close, which confirmed this 3-candle pattern here, which was below the prior number here. So entries are signaled on that 3rd candle when it closes. Sometimes, like we saw before, it can cause there could be a huge gap way up here before we get that 3rd candle that closes. We are not getting the entry signaled until that closes. So once we have an entry signaled, we need to input the initial stop loss. And that is going to be determined as one interval above the number that signaled the entry. So here, this was a 7, and the 7 occurred on this one candle. The number occurs on the one candle that was the high or the low. It's the number is above that one candle, even though we wait for this 3rd candle to close before it's confirmed. The number is placed above the highest high or below the lowest low. And the stop loss starts as one interval above the highest high or one interval below the lowest low. So right here, we don't have the exact number, but we see this is 78, this is 79. So let's call this 78.50. That would be where the 7 is input above this high. We're going to call it 78.50. The stop loss is one interval above that. The interval is 100, therefore we add $100 to this highest high here. We're calling it 78.50, so the initial stop loss would be 79.50. So that is the initial area where we put the stop loss, and there's something that we need to note very importantly here, that the scale, the interval will adjust based on zoom. The correct interval is found when the zoom is set to include the entire pattern without any price action to the left of 0.1. Okay, so here we see that we zoom in such that we can see the entire pattern. There's a tiny bit of price action left to the 1, not necessarily because it needs all 3 of these, so that little one there is irrelevant. It's off by half a candle. That's okay. This is going to definitely get us close enough to where the zoom will be consistent. So we're zooming into where this whole pattern is viewable without any price action to the left of this 1. And now we see this, the interval here is 100. 69 to 7,000, that's a $100 interval. Whereas if we zoomed out, now we see we're looking at much more than just the pattern. We're looking at price action all the way back to 2013. Now look at the interval. Over here on the y-axis, we've got 4,400. Next one up is 46. That makes the interval 200. So it's very important that you have the right zoom onto the pattern such that the interval is going to be consistent, because that is what is going to be used to set the initial stop loss. So here we take a look at right here. It is a little bit difficult to see, but notice that there's a blue line that is drawn from here, right here, to here. Okay? So that's a blue line that is drawn above, it starts above the 5, one interval above the 5. So this is the first thing we do, is go one interval above the 5. We know that the interval is 100. The high of the 5 is $7,700. So that tells us we are starting the line at $7,800. That is one interval higher than this, $100 higher. That's where we start. And we extend it out 5 candles, including this 5. 1, 2, 3, 4, 5. You see the crosshairs kind of highlighted on this candle right here. That's where the stop loss gets extended to. So it ends 4 candles after the 5. 1, 2, 3, 4 candles after the 5, or 5 candles including this one. 1, 2, 3, 4, 5. So this line starts one interval above the 5 and it gets extended 4 candles after the 5. Okay, so we have a line that starts here and is extended here. If at any point the price closes above this line, any point in these first 4 candles following the 5, that the price closes above this line, the stop loss is executed. So up until this point, we have been focused on wicks and the absolute highs or lows. But with the stop losses, we are concerned primarily, we're concerned exclusively with the closes. So this line right here is what represents the stop loss. This is the initial stop loss before it gets trailed. It remains in effect for 4 candles after the 5, even though the entry was not necessarily signaled until this close here. We had to wait for this close to confirm this 5. So we're not in the trade until here. So this stop loss is really only effective for 1, 2, 3 weeks, 3 candles depending on your scale. So for 1, 2, 3 weeks, if any time in these candles, we just entered right here. Now this opens on Monday. If any time in these candles, price closes above 7,800, we're out. If it wicks above and falls back below and closes below, we stay in. So that is the initial stop loss. And we are going to start trailing it by 1 interval per week after this initial line, after the price moves beyond this initial line. So this was extended 4 candles beyond the 5, 1, 2, 3, 4, boom, that's where this line ends. So now this stop is done. After this candle closes, this stop is no longer in effect because that's what this line illustrates by being extended to here. As long as price is under this line, this is our stop loss. When price moves beyond that line, like it does on this candle right here, it'll be the 5th candle after 1, 2, 3, 4, 5. Now we no longer are under this line and it is time to trail the stop loss. The stop loss gets trailed by 1 interval and is now only extended for 1 week because every week we are going to be trailing it by another interval. So right here we had this stop loss for 3 weeks. We enter here. This stop loss is effective here, here, here. Price moves beyond this line. Now we start trailing by 1 interval per week. So what does that mean? We look at this stop loss and we subtract $100 from it because the interval is 100. So we've got this initial stop. Now we are trailing it to here, back down to 7,700. Now that's in effect for 1 week. If at any time this candle closes above that line, then the stop is executed. And if it doesn't, then the next candle will move beyond where this line is. Now we're moving beyond it, and it is time to trail again. 1 interval per week. This pattern will continue until the price closes above the stop. So here we see the second stop is trailed by another $100 after this week's candle closed. For 1 week, that's what this stop will be. If the stop is not triggered this week, then we are going to trail it again by $100 per week. Now here we see the price is well below this stop loss. That's not always going to be the case. Often the price will be threatening the stop loss very quickly. So we repeat this process until the stop loss is triggered. Boom, that's what we see here. Okay, so we entered our short right here. We had this stop in effect for 1, 2, 3, 4 candles after the 5. Then we started trailing it by 1 interval per week. So on this week, we are at 77. Next week, 76, 75, 74, 73, 72. We are starting to get the price close, but it does not close above. We keep trailing. 71, 7,000, 69, 68, 67, boom, we close above. This is turned red now. This has been activated. The price has closed above the trailing stop. So we now exit our short exposure and take full profit. This happens to be a unique situation where we got a 6. So in this circumstance, we got a prime 6 while we are short. So what do we do? Right here, this candle closes to confirm this prime 6. We've got a low, a higher low, a higher low, confirmed with this close right here. What do? We're in a short with our trailing stop loss is now at 6,900. We've got a prime 6 with this close above 64. So what do is we hold on to this short position until the stop loss is executed. We are not taking this long entry right here because we're still short and our stop loss has not been activated. So when we're in a position and our stop loss is still active, we are waiting on this signal. We are not taking this long because we are short and it is still active with this trailing stops. Think about it this way. There are many times where this 6 will need to be adjusted. We'll create a new low before going on to create this new high. In that circumstance, we hopefully will still be in our short without the stop being triggered with the close above. So that's why we're not necessarily jumping on this first qualified 6 that we get. We are holding on to our short until this stop loss is triggered. At that time, we can take full profit and look to flip the position and go long, because now we are fully out of the short with this close above, and we are coming off a qualified 6. So now we can look to go long and rinse and repeat the stop loss process. Anything to add there, Tyler?
No, that's very complete. What's interesting is you now see we've got 2 signals that are active. We're only using the one from the top, but we are ready to place, and you can place as soon as the 6 is in place, the trailing stops behind that going up the other way. And that opens up the door for those of you who like arbitrage and hedging and other things to decide how and when you want to get out of one position and into another, or maybe between different things using options or futures. What I'm saying is, just imagine that you've been watching June cattle and December cattle, or June gold and September gold. And on the June contract that you're trading, you found a 5 high, and then you've placed your stops and you're making money going down on the short side. At the same time, on the September contract, you've got a 6 forming, and now you've got to buy. You can make a decision to either get out of your short position on the June or to add a long position on the September, and you're long 1 month and you're short another month. And depending on what the premium and the spread and the time is between them, for very sophisticated investors, you can be using this in both directions at the same time. But the simple way of doing it is just precisely the way Socrates explained it, which is you're either out of this trade if you're not short, which is the way I like to invest, although I could very well go net short for clients off of this 7 for a lot of reasons that have nothing to do with Seljen. So what I'm saying is you're getting signals, you've got stops, and you can double check those signals with other tools you've got, or you don't have to do it. You can just go by the signals as you see here. So now I think, do we have trailing stops going the other direction?
We certainly do. So let's go ahead and take a look at how that is going to work. So here, remember, we were waiting on this signal here. We did not take this signal here. We waited for the stops to be trailed, for that to be taken out. And then once that happened, we do the same stop loss process down here for our long. So boom, here we got a close above the stop loss after the qualified 6. We decide that we want to go ahead and flip the position, which means cover the entire short and go long. We do that on this close right here. Price would be slightly under 6,800. We do the same process for the stop loss. Now remember, that's going to start one interval below the low of this 6, which is at 5,900. So we subtract, we remember the interval is 100. We subtract $100 from 59, that gives us $5,800. That's the initial stop loss. Even though we're not in the trade until this candle, we're still setting it up exactly the same way as we did before. So we start it right here at 58 and extend it 5 bars, including this low. 4 bars beyond the 6, 5 bars including this. 1, 2, 3, 4, 5. So we don't really enter until this close, and now this closes and we're in the position right when this candle opens, essentially. So this candle is 5 bars, including the 6. 1, 2, 3, 4, 5. So we are only going to have this stop loss in place, really in effect, for 1 week. Even though we're drawing it back here, we're not entering the trade until here. So only for this candle is this stop loss going to be relevant, because after this candle closes, price will have moved beyond this line and it will be time to start trailing. Say the entry wasn't signaled until this candle here. Well, we would already be trailing our stop loss by the time that we entered. However, this wouldn't still be set up the exact same. This would not change even if we're not in the position yet. So it's important to understand. We extend this 5 lines. So for this candle here, if this closes below 58, we're out of the position. On this candle, we extend beyond the line. It's on the, we've got 1, 2, 3, 4, 5 bars, including the 6. On the 6th candle, it is time to start trailing the stop loss, just like we did up here. So we have this initial line that starts one interval below the 6, is extended for 5 weeks, including this 6. After that, after this candle closes, we are going to start trailing it. That is on the 5th candle after the 6. This is the 6, 1, 2, 3, 4, 5. We've now moved beyond the initial stop loss and we need to start trailing. We're deep into unrealized profit. Maybe not deep, but we have some unrealized profit here. And now we want to make sure that we're not waiting for this initial stop loss to be triggered before exiting the position. We want to start trailing the stop loss, which is going to protect our unrealized profit. So on this candle, what do? We move it up 1 interval and only extend it for 1 week. It gets extended by 1 interval per week after this initial one is no longer valid. So on this candle, we draw a new line that is 1 week long and 1 interval above here. The interval is $100, so this goes to 59. Initial was at 58, now we're up to 59. Next week, what do? We go to 6,000, extend it for 1 week, and then we go to 61, 62, 63, 64, 65, 66, 67, 68, 69, 7,000, 71, 72, 73. Look what happens here. We get a wick down, closes well above. So we stay in the position here. We did not close below the stop loss. So we move the stop to 74, and we actually don't get out until about 73 because we're waiting for the close. So we move the stop this week to 74 on this candle right here. The stop gets moved up one interval and is good for 1 week at 7,400. That does not mean we're going to get out at 7,400. A lot can happen before the week closes. There's nothing saying that this thing can't fall all the way down to 6,000 before it closes. And now we just lost money when we were way, way, way into the profit. So this is something that's very, very important to understand when you're using a stop loss system that makes you wait for the bar to close. Is that something that you are comfortable with when you are this far into profits? For me, I might look to complement this by taking partial profit off of this 7 up in here, maybe on this candle, taking partial profit. The idea that we are so close to the stops and we are showing major signs of a reversal tells me that a close below is highly likely. And remember, cash is king. We're trying to protect our profits. We are not concerned necessarily about making sure to get the exact best prices. So here it's just important to understand that this could be a very stressful week. If you don't know, maybe there's some news that comes out. You really just don't know if this will close anywhere close to the stop loss. So you need to keep that in mind when using a system that makes you wait for candle closes. And that's something to consider, that maybe taking partial profit up in here, maybe setting a hard stop loss back down in here at like 69, such that if this price does get here at any time, I want out of the position. So this can be complemented with other strategies, as can everything else. And this, again, it all comes down to personal preference. Some people are very, very comfortable waiting for weekly closes, and they know exactly what can happen. They know that a candle like this could occur, and they're comfortable with that. Other people are not going to be so comfortable waiting throughout the whole week without any hard stop loss set. So that's something that you can consider, and hopefully I'm not making it too complicated, but this is meant to illustrate the stop losses for the longs. And the important thing to point out is just because the stop loss is moved to a certain price does not do anything to guarantee that you will get out at that price, because the candle can move a great distance before it ends up closing. So that's what I had on that chart there.
That's great. And you can see it's actually very simple. It's 5 weeks at one level and then 1 week each, either up or down, with the interval that the chart dictates to you. And there's reasons for that. We don't need to go into it, but we've tested and retested a lot of that for a very long period of time. So that's the way the stops work. Now, this is a very unusual pattern in that we've got a very sharp V bottom, but most of the time you're not going to see that. You'll see a bottoming process, and that process would mean on these kind of candles you might very well go back down and test bottoms again without breaking these. So as soon as this 6 is established, you want to draw this all the way up your chart. It's not going to change. Once this 6 is established, you draw this for a total of 5 week period, and then go ahead and put your intervals in. Right here. You don't have to wait for here, here, here. You can do that. They're never going to change unless one of them is taken out. Well, so let's just assume that here, after we've established this as a real 6, a real turning point in Seljen, this close right here, let's say this one doesn't go up, it goes down. This bar is down here somewhere. That means that another week is going to go by with these still coming down. These will keep going down. You can draw them all the way off the bottom of the page if you want. What you will find over studying many, many examples is this kind of action takes place frequently, where the price will go zooming up very close to the stop and then drop off again, over and over and over again. It only did it one time here, but I can show you examples where it does it 8 or 10 times, and the stops keep you in for months and months and months and months. In this case, because we have a V bottom, by definition, this price is going up very quickly. So just in your minds, move these guys down here in a consolidation pattern, and you'll see what will happen is these stops can actually come together with these stops. They can cross with the price underneath both of them without triggering either of them. That's why it's important on this 5 to draw these in, on this 7 to draw these in from the top now. Even though you can see where the top is going to be. The top is going to be $100 above this. Put it in and go over 5 weeks and bring it down. Bring it right down the page. Because at some point, because of my rule, which is that trends, all trends will change. All trends will change. Therefore, this simple system will keep you in a trending market with stops as long as the trend wants to go on. And you have a double benefit, because if you're moving from a 5 to a 7, you are going to get stops moving in both directions that are going to give you more and more information every day and week that goes by. So all very interesting stuff to me. I hope you found it interesting. This is showing the same sort of a thing with the stops above the 7, showing how far this can go before you're actually taken out. This one is the NDX. And we can show you many other examples. But what we wanted to do is we want to look at some more interesting examples of things that we have been spotting while doing the research for this. This is the S&P 500. I'm going to go, and I'm just going to pick out a couple of things that I like, and Boeing is one of them. Now, Boeing is interesting to me at this point up here because I see a 5, and I see a 4, and I see a 3, and I see a 2, and I see a 1. Now, you will get to the point you will just see these wherever they are. Well, oh my goodness, that 5, 4, 3, 2, 1, go up here and put a stop of $20. Why? Because the interval's 20, but I'm going to make it bigger the way Socrates showed us. Let's go 5, 4, 3, 2, 1. Everybody see that each of those are valid. This 1 is higher than both of these. This 2 is lower than both of these. This 3 is higher than both of these and higher than the 1. This 4 is lower than both of these and lower than the 2. And this 5 is higher. This 5, the green, is higher than both of these and higher than the 3 and higher than the 1. So you can quickly, without I mean, once you've maneuvered these for a while, you can see them. And now what is interesting, let's go up. This interval is now just $10, 410 to 420, but we've got the entire price movement on the chart, nothing to the left of it, which is the way we determine how big is. We're going to go 10 bucks above the high, and the high in this case is 446. So we're going to go to 456. 446 and $10 is 456. Very good, Tyler. So we're going up to 456, and we're going over 5 weeks. 1, 2, 3, 4, 5. And then we're coming down at an angle of boom, bada, 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 boom. You are still short. And if this breaks through this trend line, which happens to be something, call it what you want, hyperwave, angular trend line, you've already broken below short, intermediate term moving averages, long-term moving averages. They're all moving down. We're sitting right on this thing. But you've now got another piece of the puzzle that would have gotten you out right here at the close of this candle. And you'd be out all the way down from the close of this candle, which is 425-ish, down to where we're sitting now at 341. So that was one I wanted to pull up really quickly. Do you have any that you're interested in? I got a million of them, but I know you do too. And I want to look at Amazon, because Amazon on a historical basis is saying, use Seljen on me, please. I want to give you all my money in both directions over and over again.
Well, it's going to be tough not to pull up that chart. So let's start there, and then I can go ahead and see if there's time to go over some of the stuff I find interesting. So taking a look at Amazon here.
Let's go all the way back to those little blue areas. The first little blue area on the left is 2001. Now, we had the dot-com bubble burst in March of 2000. We went down until March of 2003. Here, we've got a 1, 2, 3, 4, 5, which is a buy signal using Seljen without putting the numbers, just picturing what's going on. That's occurring in 01, right after 9/11, which was September 11th. 3 weeks later, you get a Seljen buy. Now, the market did not stop going down until 2003, March of 2003. But Amazon is giving you a buy signal 2 years, a year and a half before the bottom of the market. And by the way, you can see it goes from $4, $5, let's give it, up to 50, 55, something like that. In the middle of a bear market, in the middle of a recession. Then we get this weird thing going on, and look where it occurs. This is 2006, 2007. We have not even begun the downturn of the 2008, 2009 calamity. And all of a sudden, this silly thing gives you a 1, 2, 3, 4, 5, and you can see you catch the bottom. And then this goes from 25 bucks up to 95 bucks. And we haven't started the recession. We haven't started the mortgage mess. So what I'm saying, there are, for whatever reason, I don't know what the reasons are. And now I see this thing over on the right. Look at that. 1, 2, 3, 4, 5. And what's to the right of that? That is a weird one. 1, 2, 3, 4, 5, 4, 3, 2, 1. That's a top right there in 2012, which means you've got a bottom at 170 after seeing a top at 250. in Amazon, and that one at 150 takes you from 150 all the way up to, you know, Lord knows what. And you've got to put on your stops and look at them closely. But what I'm saying is, I'm just showing you individual stocks running counter to not only other technology stocks, but stocks in general, S&P and Dow, and sometimes a year or two in advance, getting you in and out of positions while this other stuff is going on. So I just find that really interesting.
How about taking a look back here to the .com bubble and giving us a 5, 4, 3, 2, 1. So this gave you a 5 top here in December 1999, right before the .com bubble collapse. We've got 5, 4, 3, 2, 1. Higher, higher, lower than that. So we've got this beautiful Seljen sell signal, number 5, right here at, that would have occurred at this close, $94. So if we're just trading Amazon using Seljen from 2000 to 2000, from 1999 to 2008, let's just take a quick look at the signals we would have gotten. Sell signal right here, $95. Try to visualize the stop losses. Those were never in danger. You just made this whole move, selling right here off of this 5, never even sniffed the stop losses until like here, like basically right at the bottom, right after the buy signal. So we're selling around 95. We may be waiting for the stop loss instead of taking this as discussed. So let's just say that that occurs somewhere in the $10 to $12 range, out at 95, either out or short at 95, buying at $10 to $12. Then that stop loss would probably get initiated somewhere in here in the $40 range or so. So we, again, sold 95, bought 10, and we're thinking we got out around 40, got back in around 26, 27 on this. Let's see here, that would be, let's say conservatively on this close here, 29. And then that is taking you all the way up into here. Before the 08 mortgage crisis, Amazon was still positioned in a very bullish manner. So we got out by the trailing stops in here, and now we've got 5, 4, 3, 2, 1 there. 5, 4, 3, 2, 1. So now we're back in down around 40. Selling 95, buying 12, selling 40, then buying back in around that 40 area, getting out up in here around 80, back in around the $40 to $45 area, and then again visualize that stop loss. That could have remained active for a very long time. And if you picture the stop losses are moving at pretty much a 45-degree angle, they're moving at a consistent interval, 1 week, $100, or one interval for 1 week is going to be a consistent rate of progression for that line. It kind of will create a bit of a trend line. That is what I am kind of showing when I'm visualizing where the stop will be taken out. It's like almost a trend progression of the stop losses that are being trailed at a very constant rate of kind of a rise over run scenario. So as Tyler said, it is absolutely amazing how Amazon has been responding to Seljen, and in hindsight, that is quite an appetizing situation, and goes to show how powerful, well, A, how powerful this is, but also B, how it tends to occur at the end or beginning of major market cycles, right? So we got the broadening top back here, originally .com bubble. We got the broadening bottom at the bottom of the .com bubble. Another broadening bottom leading up to the mania in 08. And basically these are occurring right around major macroeconomic events. So not only is it a powerful signal, specifically as illustrated on Amazon, it's occurring at times that are very, very important that can only necessarily be viewed that way in hindsight. Nobody knew about the dot-com bubble until after it happened for the most part. So the fact that now, not necessarily on Amazon, but on some major indices, we're seeing these patterns occur, it really makes me wonder what sort of underlying economic event it could be signaling. And an area where I think I was intrigued was to take a look at the US dollar and how strong it has been, to get an idea of, are we seeing some major shifts that are not only occurring in the indices and in the equities, but are these shifts potentially also happening in the major currency markets? So here we have the DXY pulled up. That is the US dollar against a basket of currencies, primarily the euro and the yen. And this is the most common chart for people who are wanting to understand, is the dollar strong or is the dollar weak? It's going to be based against a basket of other major world currencies. As said, primarily the euro and the yen. So let's take a look at the monthly chart here to see what is signaling potentially from Seljen. And we are looking at the strength of the US dollar. If this chart's going up, then the dollar is getting stronger. So what do we have here? We've got a 5, we've got a 4, we've got a 3, we've got a 2, and then take your pick at the 1. Let's see here. We've got a low that is lower than the high, lower than the high. So I give this 1, 2, 3, 4, 5. Seljen signaled a buy on this candle here. We have a low that is in between a higher low and a higher low. This candle closed around $90 in March of 2018. Buy is signaled based on Consensio. We can set the stop loss and trail it. We can see that I would be very confident that we have not gotten a close below. This probably danced around it, but we have not gotten a close below. And we were signaled to go long the US dollar off of this 5, which take a look at this pattern, has been forming over, it started in the 1 was back in 2015, the 5 didn't happen until 2018. So it took 3 years for this pattern to form. The longer that it takes a pattern to form, the more important it is. If it's a pattern that just took 2 days to form, that's not very important to me. If it's a pattern that took months or years, then that's very important. So the question was, are we seeing potential major shifts occurring in markets other than just US equities? And I would answer yes, based on this chart right here. We're seeing a massive broadening bottom for the DXY that is occurring basically near major trend support, has broken through what happened back in 2015. We broke through this, we just ran right through this major area of resistance. There was a trend line here, and then there were horizontals at every step of the way. We just smashed right through.
And this is interesting also. That's a great point. This is a 5. This is a 4. This is a 3. This is a 2. And this is a 1. So we had this bottom put in all the way back here. We haven't taken it. We're doing this live, folks. So just give me a second. 1, 2, 3, 4. 1 5, 2 5s, 3 5s, 4 5s. We actually have a big sell signal up here at the top too, but let's not get too cute. This is the one, and it's gone on for years. This is 2008, 9, 10, 11, 12, 13, 14. This pattern is taking place from late 2015 to today, 4 years long. What's interesting is this is also a 6. This is a 5. This is a 4. This is a 3. This is a 2, and this is a 1, which means this 6 is moving up to a 7 that won't become a 7 until it gets way up here over 103. At that point, wherever it stops will give you a 7, 6, 5, 4, 3, 2, 1. So absolutely fascinating with the dollar. That's a great find.
Well, I sure appreciate it. And if you would like, we can take a quick look at a crypto chart that I found rather interesting. Great. Okay, taking a look at Ethereum versus Bitcoin. So we've got the ETH XBT ticker looking at cracking the exchange, and there is a reason for that. So let's go ahead and take a look at this action here. This is very, very, very close. And why? Because we're looking at needing to create a new low. So let's say, just before I get ahead of myself, 5 here, 4 here, 3 here, 2 here, and we could do a 1 right there. Okay, so that is very close, because is this 5 below this 3? That is the question. If it's not, it does not qualify. So here we're going to take a look. The low of this candle was 0.02453. Okay, low of this candle, 0.02458. All right, so 2458 versus 2453. That's 0.00003 difference. So this is about 3 pips or ticks below this. Therefore, it qualifies as a Seljen broadening bottom. 5, 4, 3, 2, 1. And I said that I'm using Kraken for a reason, and that is because this candle is not below this candle on all exchanges. And that is described to me by Tyler as a crypto problem and not necessarily a Seljen problem. In crypto, the exchanges can vary significantly, the price can. So it can be difficult to determine, well, what do I need? All of the exchanges to have a qualified setup, or do I only need one exchange to have a qualified setup? That's up to you. For me, this is good enough, primarily because of the confluence that we see from other areas of support. So seeing that we also are at a major area of horizontal support tells me that I am inclined to believe in kind of what this is signaling to me, in the sense that it's very, very, very close to qualifying, and I might be inclined to say that it is not qualified if we weren't at a major area of confluence. I'm always wanting to take the conservative option. So if I see 1 exchange has a qualified setup and 5 don't, well, I'm very inclined to disregard that, unless there's significant confluence from other indicators. And here, that is what I am seeing. Again, as Tyler likes to say, don't tell me what to buy, tell me when to buy it. I'm just looking at this as a chart. I'm not looking at this as a fundamental project that I want to invest in. This is just a chart. Take the ticker away from the top left from me. I don't care. I'm going to analyze it the same way. So in terms of don't tell me what to buy, tell me when to buy it, right here at 0.03075 or so. Why? Because that is when the buy signal was confirmed based on Seljen. We have this third candle that closed confirming this 5 point. So this is when to buy it, right there. And that is a very interesting chart to me for a number of reasons that we won't take time to get into, but the altcoins are at a very crucial spot in a lot of charts, whereas if they do break down these major areas of long-term horizontal support or resistance, then there is a long, long way to go before that next area. However, if they do find support from here, we see how much room there would be to the upside. So this is a chart that I find very interesting, and I would consider it a qualified setup, even though all exchanges do not show it as this candle being below this candle.
Terrific, great. We've got time, I think, just to pull up another one. There are a number of examples that I will not go through, but just to show you in your study guide that we had to go over, but you have them, you will have them tonight or tomorrow after we've sent all of these out. But let me just pull up a couple of things. Those are the NDX where we're showing how to create the stops. And then we've got this entire section where we are looking at the various constructions of how you figure the intervals and where they're placed. We've got lift with an interesting 5 bottom. Tone Vase will be interested to see that. We've got this interesting chart on Ethereum Bitcoin with a 5 bottom. This is the dollar chart again. And the dollar over another time period. Here's the makeup of the dollar index, so you can take a look at the dollar against each one of those separate pieces to see where the strength and weakness is coming from. This is the euro, which Tone has been talking about on a monthly basis that I had not recognized until we did this work with a 5 top back in the spring of last year. 4, 3, 2, 1, and a drop from 124 down to 111. Tone has a target around 1,000. In other words, no premium at all over the US dollar. And from Seljen's point of view, that looks like a very good trade. So there's a lot of these for you to go through. This is AES, which is just remarkable in a lot of ways. And you can pull it up yourself. You can very quickly see the formation. What's interesting about this is it's very clear if you run any sort of stop for 5 weeks and then come down, you're still in this trade. And we've gone from basically $70 down to 4 off of this signal. Now, what's interesting, and we haven't had time to be able to go into it because we're going to get to questions and answers right now. So anything that you've seen here, we're also going to try to do a question and answer separate video that we will send to all participants on questions we don't have time to get to. We will have Leah ask us your questions that we don't get to in the next 45 minutes or so, and then we will give our answers and show charts and that sort of thing and get that out to you also. But this is a very important chart in our discussion, because after we talked about what happens when you get a 1, 2, 3, 4, 5, which you've got right here, that doesn't go anywhere. You put a 5 on it, you put your stops above it, and clearly it gets stopped out right away. So you're going to take X amount of a loss, but you're still waiting for the ultimate 5. And now this keeps going up and you get another 5 right here. Why is it a 5? Because it's higher than this one and the one to its right. So you put a 5 there, you put your stops there, and boom, you get taken out. Finally, you hit pay dirt. So the question is, what do you do? after you've got the formation started, in terms of taking the trade, taking this trade right here, why would you or would you not take that trade? Well, my answer is, personally, I will be using other signals. And this signal is saying this move is coming to an end. So I would want to know the fundamentals of AES. I'd like to know what their earnings are looking like. I'd like to see, is this possibly some kind of a longer term hyperwave forming with a 1 down here and a 2 up here and a 3 up here? And if I came to the conclusion that maybe, because this is a monthly chart, that we're actually looking at a pullback into a new phase wave, I would want to consider that. And you've got lots and lots and lots of time to make those considerations. You can run stop and reverse points off of tops and bottoms besides the Seljen stop and reverse points. Remember what a parabolic stop does that Seljen does not do. As Socrates said, the stops on a Seljen cell after 5 weeks come down at an angle and never vary. On a parabolic Wells-Wilder stop, what happens is as soon as you've got a penetration to the upside of a stop and reverse point, you get a new stop and reverse point above the price action that then starts down what looks like an angle, but then it becomes parabolic into where the price is trading. It gets closer and closer. It's designed to do that to get you out without having to wait for a long period of time. So it goes hand in glove with the Seljen system, which is not parabolic. It's linear. And you can actually draw, after the 5 weeks, a trend line instead of using those weekly lines. It will not vary until it's taken out. The other consideration is this is a very long consolidation sideways. So just because I get a breakout that says I've got a signal of a new high, I would like to see some kind of a pullback into that formation, which you do get down in here, as opposed to just jumping out on the first 5 that you get. You can picture where the stop is going to be, but just be patient. Remember, what you're doing is you're thinking about buying in to something or getting out of something. And in this case, because you're in an uptrend, you are already in this trade and you're looking for a place to get out. And you've got to make a decision. Do I want to get out the first chance I get? Or is there enough strength in here where I'll just hold off through a consolidation? And if that stop does get taken out, fine. If it doesn't get taken out, then I'll wait for the next signal to come. It will pay off, as this one did, as you can see here. I think because it's 310, even though we've got a lot of other things in this presentation that you are going to find very interesting. This is AES on a long-term basis, because after that wild run up, we've also got this happening, 1, 2, 3, 4, 5, with another sell signal from this very low level of 16. If you wanted to interpret this as a hyperwave with the phase 4, the crash in 5, back up in 6, down all the way to the beginning point, or a 7, now we've gone from 2003 all the way to 2010 without almost anything happening with this company. So a lot of interesting things in this workbook that Socrates has put together. Just going through a couple of them. I'm very fascinated by Qualcomm for a lot of reasons. We've been looking at it from a hyperwave point of view, a Consensio point of view, and then all of a sudden we see this thing. This is a monthly chart, and it goes right up through today with this developing 5. And I say developing because we need, this is the high point, we need another lower high to complete out the 5. But the drop on this one was from 90 all the way down to 68. So somewhere this week, this month, this is why going to a weekly, you'll see some different things in this pattern. I would just suggest to you that you take a look if you've been interested in Qualcomm. I think it could be telling an interesting story. This is Roku. I know a lot of you are playing Roku. It's fairly clear what's going on here. Even if you hadn't taken this course, you can see this tug of war, 1, 2, 3, 4, 5, as clear as day. We're now up at the 5. We are waiting for a weekly candle that's going to be below this, and you're going to smack a big 5 up here, and that will be very interesting to a lot of people, I believe. Okay, enough of that. We're going to get off of screen share.
That's it.
We can pull it up again if we need to for any charts, but I'm going to turn this over to our wonderful partner, Leah, and see what's going on in the land of questions and answers.
Hello. All right, guys, are you good to go straight for Q&A, or you guys want a 2-minute break? Do you guys want a break?
We can take a little break. We can't hear.
But that's a great idea. Hi. Hi.
Okay, now it's recording. Okay, cool. Hi, everybody. Okay, I've been in the background. I have all your questions. I'm going to be sitting right there with the gentleman and asking it to them. So if there's like weird reverb, let me know, and maybe I'll be like right here with them, which would be weird. But yes, Tyler's right. Since we only have 45 minutes left and we want to honor that commitment of time, we're going to take your questions and do a video later and send it to you as soon as we can. But you know, we'll let you guys know on that timing, and so you guys will get a video for. That's my computer. I'll turn that off. With those questions answered. Okay. And that's turned off. Okay, ready, gentlemen?
Great, ready.
Okay, and everybody in the live chat, let me know if you can not hear me, but I'm going to speak pretty loud right now. Okay, first question. Is symmetry a factor in the Seljen patterns? Question. In other words, are there more or less ideal shapes? For example, is it a better indicator, i.e., higher probability trade, if the numbers are evenly spaced over time?
Wow, what a great question. And my answer is, I think symmetry is very appealing in technical analysis, but I question qualitatively if it gives you anything more than something that's a little more asymmetric. When you think of head and shoulders patterns, The best one is perfect, you know, with the left shoulder, the right shoulder, the neckline horizontal, the head nice and rounded, the volume characteristics on the left shoulder and the right shoulder a certain way. But in practice, I can't think of seeing with Seljen anything that tells me that it needs to be that symmetric. We just looked at a couple of real quick charts where you had to run up for a 5 several times, which is not symmetric compared to 1 and 3 to get to the 5. But you saw the result of what happened from the top. It dropped like a rock, and the stops kept you in the whole way. That was an asymmetric pattern that worked very well. So unfortunately, like Hyperwave, with very few examples, it's really hard to distinguish patterns. One of the things that all of us are starting is a project where we're going to identify many, many more patterns and then use machine learning, quite frankly, as well as artificial intelligence to be able to answer questions like that easily instead of going chart by chart trying to figure it out. So that's the best I can do. I don't believe that it matters. Do you have any opinion on that?
I do not have enough experience with this trading system to be able to provide an opinion on that. I just say that was a great question.
Yeah.
Great. What is the significance of the trend lines involved when using the Seljen system? A showing of extra strength targets?
Oh, you mean the Megaphone trend lines? Yeah, that's a thing that I'll let Socrates go into that, but I've been thinking about that a little bit because a brilliant guy like Wald Jr., you know, noticed those trend lines. Socrates showed you an example of one where the price never got up the third time close to that trend line, and therefore it became less and less useful over time. But I believe they can be very useful to be able to, first of all, find these things, because you can easily see two lines that are diverging a lot easier than you can find these weird little weekly points above and below stuff. So that might be a good starting place, but I don't think, in fact, I know for sure it's not the ending place. It can be useful, but I wouldn't rely on it as much as all the intricacies that we've talked about.
Yeah, so from my understanding, Seljen does not need the Megaphone trend lines at all. Seljen is really focusing on the 3-candle pattern, which will often develop in a formation where trend lines can be drawn above and below at an increasing rate going in either direction. So it is not, the significance of those, in my mind, is that they are a good way to complement Seljen. I'll always want to look for confluence or multiple indicators telling me the same thing. And for me, I love trend lines. I have always really enjoyed using them, and they've been a powerful way for me to identify areas of support and resistance. So ideally, I would want to see Seljen in complete agreement with a couple of Megaphone trend lines. Like, that would be the ideal archetype in my mind, kind of like what we saw with Google, where you're getting the 3-candle patterns and then you're also getting these trend lines, which are clearly, in my mind, important areas of support or resistance. So I think that it's just a good thing to have as a confirmation that that these boundaries are going to help to support your entry and your stop loss. So I think that they can be a great way to complement, but they're not at all necessary for Seljen.
Let me just pull up one other thing very quickly, because we just mentioned Google, and I did want to show this because we have a lot of people that are following Google from a Hyperwave point of view. But if you take a look at this, what we're looking at is a massive 5, 4, 3, 2, 1 on Google, and we're late to the party again, but not much. And obviously on a longer time frame, if this really is a big top, there are other implications, as you can see here, in terms of a trend line breakdown. We did break down here before going all the way up to this high, otherwise we wouldn't have that 5. But you could draw in some sort of a trend line taking in these lows, but maybe it's too late for that. Maybe this is an important top. You would put your stops, let's move the whole pattern over like we just said, to this side, and we're looking at a $10 price point for a stop above this candle, which looks like it's at 1290. So at 1300 is where your stops would go, and you can tell they're going to go out 5 weeks and then down. And I would go ahead and draw that on your chart if you are either out or short, or if you're still long and hanging in there. So again, there are a lot of examples of these going on right now.
If you stay on screen share and go to Amazon, remember where that is?
Yeah, I do.
All right, and it's more of a trading question. Okay, just as you don't play the next number until the previous number's trailing stop is hit, do you also not play a newly developing Seljen setup that may appear until the previous setup trailing stops are hit? An example being Amazon.
Yeah, that's a great question. And my answer is, the way I do it is I take the one that is already formed and is moving, and I don't try to predict when the next one may or may not happen, regardless of what's going on. But that also depends on which way you are playing it. If you are in or if you are out, I always take the most conservative decision in a binary decision. So if you've got two conflicting signals and going in two different ways, you ask yourself, which is the one that is going to save me or keep the most amount of money if things go wrong? And that is the answer that I tend to use. You might come out with a different answer. But let's just take a look at the chart itself, because it has not made it up to these highs, but there's some interesting stuff going on with this 5, this 4, this 3, this 2, and this one does not make it because it's too high. So this guy here, let's do it again. 5, 4, 3, 2, and if this was not higher than this, that would be there. So then you can go the other way, 5, 4, 3, 2, 1, and I don't see that. So
I think I could answer it
yeah,
using
please.
a different chart very quickly.
Sure.
This is something that I have definitely considered, and the main reason why is due to what we're seeing in the major indices right now. So let's take a look at the SPX. Actually, I'm going to try to find it on this chart so that we have the stops pulled up. 1 second. And here we go. Okay, so actually I want to pull up the stop loss chart. Sorry about this, guys. 1 second, but I think this is a very important question that I want to answer thoroughly. Okay, so we've got the S&P right now that has been experiencing that prime setup where we have had multiple opportunities to go long or short. And we illustrated the stop losses. The person who asked that question interpreted exactly right what we were saying about waiting for this signal until this stop is taken out. So as I understand it right now, the question is, we got a sell signal on the, well, this is the NASDAQ. I said S&P, the stop losses are drawn on the NASDAQ, similar situation. So right here, the sell signal occurred right when we closed here below 76 because we're below this one and below this one above the 7. So right here, a sell signal occurred. Now let's say that we are not in this long. The question, as I understand it, is do we wait for these stop losses off the 6 to get taken out before selling this 7? And that is, I think, a very interesting question that I think maybe Tyler using this chart could answer a little better. But in my opinion, let's say I'm completely out of this market and I've just learned this pattern, this system, and I'm wanting to go ahead and take, and I recognize this is a sell signal. And I'm wondering, should I go ahead and execute this here, or should I wait for these stop losses to be taken out? I'm inclined to think that if I'm out of the market, I'm just going to go ahead and take this sell signal here. I'm not going to be waiting for these stop losses off of this 6 to be taken out to provide confirmation. If I'm understanding right, the main reason we wait for this confirmation to be taken out off of this 6 is because we're long, and this 3-candle pattern here isn't quite enough for us to want to exit that position. We still want to be holding on. So since we're in a long, we do need to wait before we want to sell this. But if we're not in a long, we didn't take this signal, we just learned this system, now I would go ahead and sell on this close because it confirms the 7 and we don't have any long exposure that we need to worry about covering. We're fully out, so I'm going to take this signal right here. What about you, Tyler? If you're fully out, are you entering here or are you waiting for a down here?
Well, if I'm in the market long, as we are or were, then I'm out on that sell signal right there. Why? Because I'm getting out of a position and back into cash. If we are in cash and we aren't in the market, we have no exposure, I'm not going to short that position there until we've got the sell signal from below that is moving up, the orange signal, telling us that this down move is, the up move is come to an end. At that point, I would short it because now I've got double confirmation that we're in a downtrend, and I'd be willing to risk more money by taking it out of cash to put on the short side of the market.
Great question.
Yeah, very good.
Is there any evidence of Seljen being more predictive for a long signal as opposed to a short signal? Or is it equally effective in both directions?
Well, it's funny. One of the reasons we asked people to bone up a little bit on broadening tops and also on Megaphone is because in most references it says it's better for tops than for bottoms. We found when we were studying this and put the Seljen together, since we were doing it on the basis of commodities, that was not true, that tops and bottoms were equally accurate. And there were almost an equal number of them occurring at various times across different types of asset classes. So my thinking is, and we've shown you some examples, but they certainly you could think of them as being cherry-picked, you know, just anecdotal. We're just showing you things that we want you to see as opposed to the broad spectrum of things that have occurred. But what we're trying to do is just teach you, here's the rules, here's what we have found over a period of time. Now go apply them, find as many examples as possible, and you'll start, you know, gaining your own confidence levels in things like tops versus bottoms, and when to take out stops, and should you sometimes use stop and reverse points as opposed to these linear type of things that we did. So that's a long answer, but as I'm saying it, I would say I think it's equally effective on both tops and bottoms.
Great. Okay, that answers the second one. Tyler, how do you set the interval when you were using paper charts? The division of the move from 6 to 7 into smaller parts is rather arbitrary, isn't it?
Yeah, it's very arbitrary. And actually, I think we were more effective using actual graph paper, which is the way this was all built, because the intervals are on the graph paper. They're not rectangular, they're all square. They're different size squares, but you either get 16 to the inch or 8 to the inch or 4 to the inch or 1 to the inch. It doesn't matter. When you buy graph paper, it's all set up for you. And you don't even have to calculate anything. You just draw one bar below where the higher the low is. Now, this rule that we came up with in terms of Socrates and I just came up with this after thinking about it for a while. This idea about on charts such as stockcharts.com or on TradingView or Fidelity or Schwab, things where you've got technical tools, you're limited to what they allow you to do, how flexible they are. I like TradingView a lot, even though I still haven't figured out 10% of it. I mean, I have figured out 10. I don't know the other 90%. But I find this very awkward for using this trailing stop system. So what we did is let's just come out with a firm rule, and we will revisit that rule in terms of looking at other intervals based on other things. But for now, this seems like a great way of doing it. I'm sure we're going to find a lot of exceptions where if we had done it a little bit differently, for example, using a 45-degree angle and then going backwards and calculating what interval would that take, which would be a real pain to have to do it that way unless somebody knows of an easy way on TradingView to do that. Then you wouldn't have to go through this of moving the chart in such a way that you don't have prices to the left of where the pattern's actually beginning. Right now, this feels good for me.
Okay. For a topping 5, is it better to go short or use a put?
Neither. It's really up to you. They're not equal in any way. They sound like they're equal. The end result can be equal. But remember, whenever you start dealing with options, there are all kinds of variables that you don't have if you're simply long or short a stock. And obviously, the big variables are the premium you have to pay and the decay, time decay until maturity. And it takes an expert to use those things, all things being equal. If you don't use options to leverage your position, in other words, if you use a put at a 5 equal to the number of shares that you are wanting to go short or to hedge by putting that option on. If you don't leverage that by using the same amount of money that you would for the stocks, but leverage your option position 5 or 10 or 20 times what's at risk on the stock side of things, to me, those are equal. But now you've got the variables. If you can put the put on with no premium, over the price of the stock, then those things are equal. If you got enough time on the chart to be able to buy without having time decay on the option, then it approaches equality. For you to find those three things is almost an impossibility. So my answer is go with the simplest, the easiest, and the most controllable of all the variables, which is simply going short the stock itself. If you are aggressive and you know how to use puts, go ahead and use puts. If you are aggressive and sophisticated and you're willing to take leverage, use leverage. But all people are not equal. You've got to really understand who you are and what your capabilities are.
Can this method be used with the Wyckoff method?
Very interesting question. And Socrates knows a lot more about Wyckoff than I do, although I've gotten very interested in it because we've got 4 or 5 people that have been asking me a lot about it. But I have not made a comparison between the two. Do you have any feeling about that?
That is definitely an intriguing question, and I'm inclined to think that they would not complement each other. And let's take a look at why I would say that. A Wyckoff is generally going to occur within a flat range, a flat horizontal and for resistance and a flat for support. And the price will wiggle outside of that horizontal zone, but it should only do it in one direction. So if we are in Wyckoff accumulation and we fall below the area of support before rallying hard and creating a new all-time high, this would be considered a spring, a Wyckoff spring, and that would be expected to be the low. Basically, if this was a Wyckoff, then we would not expect to see another higher high that doesn't have continuation up here. Essentially, there's 2 ways in my mind that price fakes out from Wyckoff accumulation or distribution zones. When it is accumulation, there will be a fake to the downside, and that is called the spring. That will create a new low, but it shouldn't necessarily occur after a higher high happened. Generally, this would be a flat area of horizontal resistance, flat area of horizontal support. Price breaks down the horizontal support briefly, provides a spring, goes on to rally, and then you would expect it to basically find support here as a signal of strength and go on to create new all-time highs. Without this 5 here, we'd expect flat horizontal. On the other end, if it's distribution, there could be the up thrust after distribution, where you have the horizontal range, the price breaks through horizontal resistance, looks like it's going out to the upside, but that's just the fake out. That's the up thrust after distribution. The price then proceeds to fall back down. So for me, I picture a Wyckoff as like the points are going to be even. The 1 is going to be equal to the 3. The 2 would be equal to the 4. And the 5, if it jumps up above the 3 and then crashes down, creating a new low, that would be the up thrust after distribution. You would never expect another high above that area. You'd expect this to be a legitimate breakdown based on the Wyckoff pattern. So really, I would expect to see these numbers equal and then only one higher high that leads to a lower low, or one lower low that leads to a higher high. That's just off the top of my head, what I'm thinking is I'm trying to picture the two, and I think that it is intriguing that they do have some similarities, but I think there's some very small differences that would make it such that you're either going to have a Wyckoff or you're going to have a Seljen.
Great.
If you see the general shape of the broadening top bottom, should you try starting your count from the 1 or the 5?
Yeah, always the 5. Only because it becomes very clear. Let's pull up somebody was talking about Square. I don't know if I should do this one. No. Microsoft 5, 4, 3, 2, 1, 1, 2, 3, 4, 5. Believe it or not, Microsoft isn't a pattern, but I just want to answer your question specifically by going to the monthly. On the monthly, you don't really see anything here. It just looks like a consolidation and another move up. But as you break it down further and further, the easiest way to do the count, and you can go the other direction to help you find things and then go bigger. This is the daily. On the daily, this is not going to be a 5 area over here, but this might be. Why might it be? Because it's the highest end of this chart. Whereas this is lower, therefore you can just kind of ignore that. So let's just call this a 5 off of this huge gap that didn't go anywhere before it turned down. Now you want to go lower, but you're looking for a bunch of points. You need a 4, 3, 2, which you have here, but clearly these ones are higher than this, so that's not going to work. So you have to drop lower. 5, 4, 3, 2, 1, almost. But this to me looks, the high there is 113.24, and the high here is 113.25. Believe it or not, one tick. You will find that over and over again when you're doing these things. You've got to be very precise. But because this was 113.24, this is lower than this. And what that means is you've got a 5, 4, 3, 2, 1 just by a tick. Okay, somebody asked about symmetry. That's not great symmetry. You can't even see it. I mean, it's like it's totally hidden, but it is there. We don't trade the daily. Some of you might decide to try this stuff on daily or hourly or 4 hourly. I don't. There's only so many hours in the day, so I'm going to stick with my weekly. And on the weekly, this is clearly higher, so there's a good 5. This is clearly lower, there's a good 4. This is higher, there's a good 3. This is lower, there's a good 2. And this is higher than this. It is not higher than this, though, so that is not a 1. So now we've got 5, 4, 3, 2, 5, 4, 3, 2, and 1. Okay, so we do have on Microsoft. Now the question was, what was the question, Leah?
Do we start with the 5 or the 1?
Oh yeah, always start with the 5. Trying to pick out a 1 in this madness isn't going to be helpful if you don't have a 5 and a 4. So if you go backwards, each of those things gets clear. You saw how I was struggling to find the 1. Socrates found it, and it was 1 over. Well, to try to dig that out of here is difficult, but it isn't when you start backwards. 5, 4, 3, 2, and 1. And so on. On 7s, on whichever direction, even on the downside. If this is a down, and I'm not saying it is, but then this would be a 5 at the bottom, so there's a 4, there's a 3, there's a 2, and believe it or not, there's a 1. 1, 2, 3, 4, 5. You got a buy signal right here off of the close on this candle on a weekly basis that took you up to the top. So start at the obvious ones and go backwards. It just helps me. Maybe other people look at things differently.
Okay. Are there any differences in using Seljen in the crypto market as opposed to traditional markets?
Well, it's a great question. I don't think we've got the history. I've looked at some. I've got a Bitcoin top right now that I was able to work on. You saw that We looked at Ether, and I'm going to go down to the daily because that's the only place I could find one. And it was not pretty, but we had this 5. We had this 4. We had this 3, 5, 5, no, 5, 4, 3, 2. Maybe we didn't, maybe I didn't see it there. Let's try a big one. 5, 4, 3, 2, 1. 1, 2, 3, 4. 1, 5, right there, taken out with the stops. The second 5, right there, stop not taken out, and then back up to this where the stop would have been taken out. I've looked at a lot of crypto charts trying to find them. I think in general it's too young. I thought I found a 5 at the very bottom, which I hadn't been looking for. Let's just quickly take a real quick look on the weekly because that would be embarrassing. On the weekly, back down here, we had a 5, 4, 3, 5, 4, 3, 5, 4, 3. You've got to go all the way back to the top, 5, 4, 3. And I couldn't find one going up either. I think it's too early to say. You find them everywhere in traditional markets. You have to struggle, like the one we found on, that Socrates found on Ethereum is just barely to a tick in a flat market. That's not what we're looking for. We want this pattern big, bold, and in your face. And the more it is those 3 things, the better it's going to be for you to trade it.
Last question. So Socrates, if you could pull up Netflix. So a question for the final hour. Can we look at Netflix and Visa as a Seljen top on the daily? Both are very subtle. Visa over the last 2 to 3 weeks, and Netflix over the last 6 to 8 weeks.
All right, yeah, I'd be more than happy to take a look at that. I was just going to show that there is a couple Netflix charts in the study guide for you guys to take a look at. So it is definitely a very interesting situation. He said the daily, so I will pull that up here so we can take a look. But I did find one on the weekly here as well. So looking at the most recent price action of Netflix on the weekly, we've got 5, 4, 3, 2, 1. So since that is there on the weekly, I would expect it to be there on the daily. Something else to point out very quickly was the 5 that came in at the top was the most cattywampus 5 that I have come across. It is way up here at 420, where the 1, 2, 3, and 4 are down around the $100 mark. So that presents some interesting problems that there will be some discussion on in the study guides for you guys to look into when you get the chance. So we'll take a quick look at the daily set over the last couple of weeks, and that's sure looking nice. So let's see, this is lower than that. So I'm wondering if this is maybe a 6. So 5, 4, 3, 2, 1. Yep. 6, 5, 4, 3, 2, 1. Yep. 7, 6, 5, 4, 3, 2, 1. Or how about this red one right there? 1 right here. Yep. So this could be looked at a number of different ways. It looks like is this, just double check to make sure that this is lower or that this is higher than this one. So the low here,
342.47, 342.27. The second one's lower.
okay, so that does not qualify. So that, this one right here is higher low than this one, meaning it would not qualify. So
no, this one was, let's do that again. This one is 342.27 and 342.47. So this one has a higher low than this one.
Yeah, that's my fault. So that does look like it qualifies. We could be seeing it as a 7, 6, 5, 4, 3, 2, 1. Or potentially a 6, 5, 4, 3, 2, 1. Which way would you prefer to look at that?
Well, did we have a 7 here? 7, 6, 5, 4, 3, 2, 1. 1, 2, 3, 4, 5, 6, 7. Okay, so we have a 7 top, which is a Seljen prime. So we are in a short position, and you can just picture the stop and then coming down. We haven't taken that out. Now, because we slightly took out a lower low, we've got another 7 on the bottom, which could also be an 8, but let's just call it a 7. 7, 6, 5, 4, 3, 2, 1. And now we've got a buy signal on that side, but we haven't taken out the short from the top. So you're going to put your stops below the low there, and you will see that after 5 weeks, you've already been taken out of that trade. 1, 2, 3, 1, 2, 3, 4, 5, and then up, and then up. You're out of the long trade, but you're still in the short trade off the original top. So now that's a daily. Remember that. And I don't trade dailies. So what you're going to find is you go to shorter time frames, all kinds of whipsaws, because you don't have that stability of having 5 trading days put together where people are, you know, the bulls and the bears are fighting back and forth. This is all happening within hours. And so you will see a lot more volatility on the shorter time frames.
This is a great example of why we are waiting for the stop to get triggered here, opposed to just flipping the position as soon as we have this qualified 7. So going short here, and then seeing this signal here that could be easily considered a Seljen buy that would have occurred right here with this close. We've got the low, higher, low, higher, low. So here we've got a 7 Seljen buy signal, but we're passing because we're holding on to the short. And this is a great example of why this thing could just roll right over and give us that kind of false 6 that we've seen where it needs to be adjusted. And in that situation, we want to continue holding on to our short and not getting into a long position too early. So great catch and a great example of why we want to wait for that stop to be triggered on the short, and how powerful it can be when a position really is moving in your favor. The stop loss system should keep you in it, whereas when it's not moving in your favor, you should get out pretty darn quickly. And that's what happened on both sides here. If you did happen to just go long in here, you got taken out rather quickly, whereas when it is moving in our favor, we're in and we're staying in despite this small counter trend bounce. So very interesting noticing the moving average is also rolling over there with the death cross price below lower high. This is a very interesting spot for Netflix as far as I'm concerned. Did you also ask about Visa? Is that
Visa as well, and we're at 4.
Okay, this will be our last one. Thank you all very much for great questions.
Let's put it on the weekly. How about that monthly look? That is just crazy.
Wow.
What a bullish stock. MasterCard looks very much the same. It is a good business to be in, apparently. So let's take a look at what we got here. We would just start with some sort of 5, 4, 3, 2, 1.
Yeah, I got a 2 here, maybe.
2 here, but then no real 1.
Right, okay,
So
so
I would
5,
go
4, 3,
2 here,
and 1
here.
Yeah, definitely. You've got one right there.
And that is, let's take a look at what this is signaling, because what is higher here? Have we confirmed it? Did this one, I think this one, this would have been a confirmed 5 right here. We had the high, and then that is between lower highs and lower highs. What's the peak of this candle?
165.74.
Okay, so now we're 1, 2, 3, 4 candles after. This stop would be approximately, interval is about $2, so it would be at 168 for 1, 2, 3, 4. Stop would still be at 168. So even though this one did potentially exceed this high, it's not going to reset our count because we got in the short here. I guess it opened here, closed here. So we got in the short here, or we sold here, and now we set our stop at 168 and extended it for 5 weeks, including this candle. So even though this has exceeded the peak here, we're not going to necessarily adjust our count and wait for another lower high here, because we're already in the position here and our stop loss is set. We have not had a close above it. So not only does this look like a rather strong one to me with kind of an extended 5th wave there, if you will, that's maybe not necessarily a technical term, but seeing that this is still very close to this high and has painted a pretty good pattern. I think this is looking good in your face, like Tyler said he wants to see. So I think that this is not only a good example, but still is in an area where it could be potentially providing a very similar entry that was originally signaled. So great find there, and that is all I've got to say on that one.
Great, very good. Well, thank you very much, and thank you, Leah. And we will send out all of this information to you all. Thanks for joining Lucid Investment Strategies webinar. And Leah, are we going to be setting up a Telegram for this group?
Always.
That'll be great, because I'm anxious to see the conversation between people that are learning this. I love the conversations in Hyperwave. I love the Consensio, but this one's very interesting to me. So because so few people have been exposed to these aspects of it, and I can't wait to see it. So thank you all very much. Thanks, Socrates.
My pleasure. Thank you very much. I'm glad to be on, and thank you everybody for attending.
Bye, everybody.